of the slumping European EV market. That's according to data from May, as new tariffs look to protect local automakers from the cheaper imports coming through from China. Earlier, Bloomberg's Francine Lacroix spoke with the EU Trade Commissioner about this subject. Valdis Dombrovskis, take a listen.
Today, we took the decision to impose provisional countervailing duties on Chinese battery electrical vehicles, basically to ensuring the level playing field and market distortion coming from subsidies which China is providing to its battery electrical vehicle producers. So our investigation has been done in strict correspondence with applicable WTO and EU rules, facts-based. So from that point of view, we do not see any basis for retaliation, and in any case, it's clear that we need to treat different cases separately.
So you're not even worried about retaliation, for example, into pork? They're investigating it, and if there was to be retaliation, are there specific industries that you think would be most at risk?
Well, as I said, we are not seeing the basis for retaliation, as what we are conducting is indeed in line with WTO rules. But we are also noting that actually we are currently the largest market which is actually open to Chinese battery electrical vehicles. We know that other jurisdictions like US, for example, have recently imposed 100% tariff on those. So our aim is not to close the market to battery electrical vehicle producers from China, but only to ensure the fair competition and level playing field. So therefore, once again, we do not see any basis for retaliation for that.
So how's the progress going in terms of talks with China? And actually, is there willingness from China to make some of the substantial changes that led you to then put the tariffs on?
Those talks with China are ongoing, and indeed, should the mutually beneficial solution emerge, we can also find ways and not to apply at the end of the day the definitive tariffs. But it's very clear that this solution needs to resolve the market distortion which we are currently having in battery electrical vehicles and risk of injury for EU industry, and it needs to be WTO compliant.
Are you worried that member states can actually then block this, block the tariffs in November, or force the EU into a bad deal?
Obviously, we are in close consultation with member states now, also prior to imposition of those provisional duties. And it's clear that member states are also interested to protect their automotive industries from unfair competition and from risk of injury, as actually the market share of Chinese, both Chinese brand and broader, like made in China battery electrical vehicles, is rapidly growing. So from that point of view, if we leave the situation unaddressed, it's going to create more and more problems actually for EU automotive industry.
Executive VP, we're also days away from the second round of the French, of course, legislative election. Are you worried that a hung parliament would actually delay any kind of negotiation on policy, or would delay the workings of the European Commission and the EU?
Well, definitely we'll have to see. Well, there I have to provide somewhat institutional response, because in the European Commission we have a clear policy that we are not commenting elections or party politics in member states. We are working with democratically elected or appointed authorities from member states.
Latvia has again nominated you for a role in the next commission. Is there a portfolio you'd like to be in charge of?
Indeed. So there is a nomination. However, the portfolio distribution comes at the later stage, because now all countries need to nominate their candidates, and then President of the European Commission, which we hope is going to be President-elect already next week, as European Parliament intends to house this vote. Actually week after next week. And only then those discussions about portfolios would stay. So it's a bit premature question clearly, I would be interested to stay somewhere in the area of economy and finance.
I mean, I know there's a lot of talk or rumors that there needs to be a role for Vice President for Economic Security in the next Commission. Do you agree? Would that be something that's worthwhile?
Well, as I said, it's premature to engage in these concrete negotiations because many countries have not nominated their candidates yet, and it's very clear the president-elect will have to see the overall picture and then decide on distribution of portfolios.
Okay, that was Valdis Dombrovskis, of course, of the European Commission, speaking to Francine Lacqua about the story around tariffs and how that story, or at least how those tariffs are adjusting and the impact that that could have, of course, on the auto market, but also trade more broadly between China and the European Union. On the story of the auto market, though, let's bring in the expertise of Elizabeth Berman, who stands by and joins us from Munich for the details on this. Elizabeth, where do we stand in terms of Brussels and their determination to impose tariffs on Chinese EVs? There have been some adjustments. Is that around different automakers? Is that as a result of pressure from Germany, for example? Where are we, and to what extent are these now locked in?
I would look to the interview with Francine Lacqua just now, where I think clearly the EU's position came across as being one that would want to create a level playing field and abiding by the WTO rules, and very clearly stating that China is not meeting these rules. So that's the one thing. And the other point you were making just then, that there's been a slight adjustment in the provisional tariffs that we've seen today. Those adjustments were really just at the margins. I mean, it could signal that there is a willingness to listen and to make some adjustments if necessary. And the two sides have also been signaling that they are ready to continue talking. And indeed, as we know, there is time to do so for some months until November. At the same time, the EU has made clear that their position is that China is not meeting WTO rules and that it's hurting the car-making sector in the EU, and that they want to protect it, which also puts them, of course, in line with other such moves, protecting industries from subsidies in China, namely the US, which has imposed a 100% tariff on Chinese EVs, whereas Canada is also weighing similar steps.
Yeah, and it was interesting to hear the Vice President of the European Commission, Dombrovskis, talking and making a distinction between the tariffs that are being imposed by the EU versus those coming through from the US. How important is it, do you think, for Brussels that they try and make that distinction clear to their Chinese counterparts?
I think what the EU's position is here is they need to walk a much finer line because of the dependence of a number of their car makers on Chinese sales, namely Mercedes, BMW, Porsche, and VW. These car makers don't just ship a lot of cars such as the S-Class to China, but also China represents their biggest market. And also vice versa, China is said to want to maintain access to the European market, which is very lucrative for their car-making sector, which is suffering from overcapacity.
What is the ability, Elizabeth, what is your understanding in terms of the ability of Chinese automakers to absorb these tariffs and maintain a competitive position within the European market?
If you look at China's biggest car maker, BYD, they sell a couple of quite popular models over here. One's called the BYD Atto, the other one's called the Seal. They're priced at around 35,000 euros, 40,000 euros. If you look at the same models in China, they retail there at a much lower price point. That would suggest that there is quite a lot of ability to absorb these higher prices. That said, BYD is going to pay a comparatively small extra tariff of another 17% on top of the 10% that's already in existence, whereas the maker of the also quite popular MG brand, SAIC, they're set to pay a top rate of 48%, and their cars are also sitting around a similar price point. So that would quite heavily impact the margins that they get for these cars.
Elizabeth, what is the status now of Germany's automakers in that Chinese market? We know China has challenged the real estate crisis. We know consumers consumers are under pressure. We know that the price point of some of these German cars are sometimes and often higher than their rivals and their competitors in China. What is the standing of the likes of VW and BMW, Mercedes right now in that market?
Yeah, I mean, what you're talking about there is a hugely interesting dynamic that, quite aside from these tariffs, is keeping us quite busy. For some decades now, German car makers have been extremely successful in China. They've led sales there, namely VW, after going early in the late 80s and establishing a presence in that market. Now, increasingly, the domestic car makers are catching up, particularly so in the battery segment. BYD has become China's most popular car maker, biggest car maker in terms of sale, leapfrogging VW. And while the BMW and also Mercedes maintain a really good presence in the luxury segment, of course, Chinese car makers are going to try and break into those segments as well because of the significant profits they can generate in that area.
Okay, Bloomberg's Elizabeth Berman with a really comprehensive view in terms of the tariff impact, but also broadly as well how German automakers and European automakers are faring in the more challenged Chinese market right now. Elizabeth, thank you very much indeed. Coming up, Eric Nelson of Wells Fargo and how to position in these markets, how to factor in the politics, the views, of course, on the central banks, the inflation dynamics as well. All of that coming up with Eric Nelson just in the next couple of minutes. Stay with us. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the This is Bloomberg.
Welcome back to Bloomberg Markets. Happy Thursday. Let's get a deep dive in terms of how to position in these markets, given of course, the politics, the views that we've been getting in terms of the central bank voices, of course, at Sintra in Portugal, and looking ahead to non-farm payrolls, that crucial data point out of the US on Friday. Let's bring in Eric Nelson, then macro strategist at Wells Fargo. You can see the session so far in Europe adding so far around 0.7%, a pretty positive day for European equities. Part of that seems to be a readjustment around the political risk coming out of France. So let's start there on France then. Morgan Stanley and others suggesting that there is a buy the dip opportunity. I wonder if that's closed up given the gains that come through for the CAC 40 in the session today. Is there an opportunity to add French assets at this point, Eric? How relaxed are you feeling or not about the politics of France as we head up to that second and final round of voting on Sunday?
I think you kind of hit the nail on the head. The dip may have already been bought in a sense. I mean, we're looking at Euro Swiss has retraced most of the move from the initial shock from the snap election. Maybe there's some more room for catch up in other asset classes. But the key here is it does seem as though the RN party is going to fall short of an outright majority, and that was the situation or the scenario everyone was worried about. The question now is, are we actually going to end up better off than we were before the snap election? I think that's harder to see right now. I mean, yes, there is a narrow path here for a centrist coalition to emerge with Macron, some on the left, and maybe some of the Republicans, but there's still a lot of pieces sort of need to be figured out here, and it could end up with a minority government led by RN, which I don't think is necessarily super market positive.
And the growth dynamics in Europe are looking a little bit more positive. There is that fiscal support that's coming through in terms of defence spending, in terms of the renewable shift, that continues. And then, of course, the prospects of further cuts from the ECB as to when those land, of course, after the first cut in June, that's still part of the debate. To what extent are those fundamentals still supportive for European markets, or does the politics risk throwing that off course?
I think they're okay, right? I mean, growth is running around trend for Europe, and inflation's coming down. You said the ECB could certainly cut more this year. We have 2 more cuts penciled in. I think the thing that maybe people aren't focused enough on, though, is German political risk, right? You've got a budget that's trying to go through here, and there's a very narrow path. There's already sort of a shortfall on the tax side, and it does look like there's some real political risk in Germany here over this budget negotiation that I think is a risk in terms of overall fiscal spending and overall, I think, growth support for Europe.
What does that mean for your strategy then? And it's really interesting that you're already looking ahead to Germany.
Yeah, well, we certainly have the likelihood of almost certainty of an election at least next year. That could even be brought forward depending on how these budget negotiations go. I think you look at the polls right now in Germany, there is sort of a path for the centrist, Merz as sort of a candidate to emerge. And that could be if there's a more fiscally open, kind of fiscally, open to shifting some of the debt brake rules or at least relaxing them. That's a very, positive scenario, but there's a lot of sort of steps in between here and there. And I think in the short term, there's more downside risk for euro from this German noise than upside risk.
Okay, so potential downside risk to euro on the back of the politics of Germany. So we arguably look past France, at least to the longer term. When it comes to if we go focus on the data story, and we've heard a number of voices in terms of central banks over this week from Sintra, do you have clarity? You're baking in, you're pricing in two further cuts from the ECB this year. A previous guest was saying this is a different cycle, these are different dynamics, and you have to think about a potential Trump presidency and the inflation story that could layer in to the central bank action. Do you have clarity on where these central banks go? Do they start to align with a rate-cutting scenario that we've seen in the past, or is this going to look very different?
Well, I think we look at the September meeting. This is really the pre-election, of course, before we have a real sense, and that's what I think near-term markets are focused on, both for pricing September, but also for pricing the next few meetings.
Yeah.
The comments from Powell the past few days and other Fed central bankers has suggested that they're worried about labor market weakness or at least softness, right? So they want to cut in September. We obviously have had one good, very good inflation report. Maybe we'll get a little bit of back and forth. But the most interesting thing to me about Powell's comments was he basically said, stop looking at supercore inflation, stop looking at services inflation. We're focused on wages, right? We're focused on the labor market. As long as that behaves, I think September is still very much in play. Beyond that, as you say, if we get a Republican sweep, yeah, there's challenges for cutting through 2025, but here and now we're focused on the labor market.
Okay, and that brings us to non-farm payrolls then. Do you expect to get some clarity? You're going to be focused on the wage component of non-farm payrolls. The top line is expected to come in at 190,000 in terms of additional jobs, so that's a slowdown, of course, from the previous month. But for you, it's the wages component. What's your expectation about how that evolves, that story?
Well, what was so interesting last month, of course, we had this relatively strong headline NFP number, but part of the reason for the relatively, the sell-off in rates, and we saw the dollar strengthen a little bit, was wages was pretty strong. We had a 0.4 month-over-month gain in average hourly earnings. This is not the Fed's favorite measure of wages, but markets pay attention to it. This could stay relatively elevated here, even as we see, some of the slack coming out of the labor market, especially if we're going to see immigration sort of start to tail off in the U.S. So this is a risk here as we go into maybe beyond September, especially if you have the Republican sweep. Maybe the Fed doesn't just continue cutting through 2025.
How comfortable are you with the view that this U.S. market can continue powering through fresh records? 15% or so up year to date. Fresh records, 33 records so far for the S&P just so far year to date. Is this a momentum trade? Is this bets on cutting? Is this an earnings story? I mean, this has legs. Do you think it has legs? Can it sustain itself?
Well, I think you have to look at both the growth and the rates picture, right? It's a very narrow path to the soft landing. right? So this trade
You still think that soft landing path is quite narrow?
I think so. Yeah. I mean, for markets to continue to price it in for several more months now, right? I mean, you already have 2 cuts priced this year in rates markets. Growth earnings expectations are pretty buoyant. Even if you get more soft landing like outcomes in the real economy, there's kind of a narrow path here for this continue to be reflected in the market, I think.
Are markets underestimating the potential inflationary risks? You touched on this, the potential inflationary risks of a Trump presidency.
Well, I think certainly it's the talk of the town, right?
Yeah.
Everyone's sort of aware of bringing back the Trump trade, as they call it.
Do you think it's premature to position around Trump as a potential president? Do you want to be changing your portfolio? Do you want to? If you're speaking to clients, do you want to say, yeah, make these adjustments, put in place some hedges, make some tweaks to your portfolio, or is it premature?
I think hedges make sense, right? I mean, I think we're at a point now where you look at the polls, and it's difficult for the Democrats. Let's be honest. I mean, you look at the polls in 2020. Biden was comfortably ahead by several percentage points at this point in the race. He's now at least behind, if not, maybe he's pulling even. And the same goes. We don't have a lot of polls for, kind of the Senate and the House, but a general sense would be that that's sort of leaning toward Republican at this point. So it's it's looking like the Republicans are in a pretty good place right now.
Where are we on the mega cap tech trade, and whether or not you see a broadening out of this market? Does a cut from the Fed in September, you say that this is where J. Powell wants to go if the data lines up. If we get that cut in September, does that lead to more breadth in this market? Is that the catalyst? And how important is that for further upside?
Yeah, I mean, you look at the general kind of corporate margin backdrop, say, even beyond tech, it's still okay, right? There's obviously pockets of weakness. Rates are still high. You're seeing coverage ratios kind of deteriorate. But across the economy, margins are still pretty good. Nominal GDP growth is still 5%, right? Mm-hmm. And so I think that continues to be relatively supportive, at least for the kind of the U.S. market.
BlackRock came on a couple of weeks ago and told us, Whaley of BlackRock, saying, look, the AI theme still has legs. It still has room to run. Do not dial back from your exposure to AI. Do you align with that view, or are you starting to get a little anxious about just the upside that's come through for that space?
Yeah, I think there's certainly been some exuberance, and I think it sort of makes sense again to see maybe some catch up for kind of the bread and butter, kind of more cyclically sensitive and the old school kind of market, as it were.
Okay. When it comes to, let's switch focus just briefly before we let you go. The Japanese yen, because I know you have a view on this, currently at 161. So there's a little bit of relief coming through in the session today for Japanese yen. But of course, 161 it's past the levels at which it hit when they last intervened back in April with that intervention from Japanese authorities. They are stuck between a rock and a hard place. Where is the downside for Japanese yen? And where's the pain point? Where's the red line for the authorities sitting there in the Ministry of Finance in Tokyo?
Well, it's a mix of both levels and also kind of volatility, right? So historically, when you breach a key level and see a 2 or 3% acceleration in a few days, that's when you see the Ministry of Finance, BOJ, come in, right? So 165 is really the level we're very focused on. We need to see that probably at least be reached, if not breached. And then, again, seeing that further follow-through volatility. We're starting to see some yen underperformance. Yeah. That's another key ingredient. So the pieces are falling into place, but we're probably still a few big figures away.
Okay, 165, the line in the sand, it seems, for the yen. That's your view coming through. Of course, from Eric Nelson, macro strategist at Wells Fargo. Eric, thank you very much indeed. Coming up, we're going to get the view from Patrick Armstrong of Plurimi Wealth. And he has a view as well in terms of AI and tech. Stay with us. This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Welcome to Bloomberg Markets. I'm Tom McKenzie in London. Coming up, Patrick Armstrong of Plurimi Wealth with markets on alert amid ongoing uncertainty around inflation and, of course, global elections. Ukraine's President Volodymyr Zelensky calls on Donald Trump to reveal his plan for ending the war ahead of a possible second term. And more election risk in focus as France prepares to head to the polls again. Let's check in on the markets, and French equities are performing well so far in the European session. It's part of a risk-on move across European equities. Softer dollar is certainly a factor. European markets then, the benchmark Stock 600 posting gains so far this Thursday of 0.7%. July the 4th, of course, happy Independence Day to those of you in the US. Markets closed. S&P E-minis, though, pointing to further gains, given the records that came through on Wednesday of around 0.1%. We keep cross currencies as well. Euro-dollar currently up in the session. And, of course, looking at Bitcoin, given the softness that's come through for that cryptocurrency. But it's the equity market moves, and there's a positioning, of course, around the political risk that is really fascinating right now. Let's bring in Patrick Armstrong then, as we mentioned, CIO of Plurimi Wealth, for a view on this. Patrick, as you look across your portfolio, how confident are you that there is resilience to political risk within that makeup?
It's actually amazing how the market is pricing the resilience, because you've got a VIX that's 12, despite not knowing who the Democratic candidate will be. You've got issues. You've got a UK election. You've got a French election on the weekend. There is a lot of moderation from the extremes, and I think that's what really upsets markets, is that a Le Pen victory in France, or her party's victory at the extreme, could be terrible, could be very protectionist, could have issues for the euro, but they are moderating their views, and there is a direction where it doesn't look like they are going to get that majority. So there is obviously risk with politics, but I think the tail events are less likely now than they were even looking a few weeks ago.
Patrick, you have an eagle eye for opportunities in the equity market, looking at individual names, bottom up. I know you have that approach. You scrutinize some of these corporates. Are you looking at opportunities that have opened up in France? Do you look at names that you might be wanting to add, given the sell-off that we've seen since Macron's decision to call this vote?
I think it's reasonable to do. In our equity portfolio, we haven't made any changes because we generally have a one-year holding period. So little short-term blips, we don't do a lot of activity on. Across our group, we have been advising some structured note opportunities on French equities that have just sold down below what probably fair value would be once we do get past this basically point risk on the weekend.
How are you thinking about US politics then, and how the ruptures that are happening within the Democratic Party? We'll see, of course, if Biden remains the candidate, how all that plays in to positioning longer term with the US story at the forefront?
Yes, with politics, there's very different outcomes. There's a lot of outcomes that may not be necessarily good news depending on your political backdrop. But our view is a Trump presidency, he focuses on the market. That's how he judges his success. So I think overwhelmingly his policies will be designed to provoke equity markets. I do think there will be some company-specific events where if he views a company as an enemy of the Trump team, he may have vindictive policies. So we own Meta. It's something I think about. If Trump came in, would he have an issue with Meta going forward? Things like that. Whoever the Democratic candidate is, I do think that's a status quo. And the status quo isn't so bad if you look at the U.S. economy. We've got unemployment at 4%. We've got wage growth getting close to 4%. And that's fueling consumer spending. So the status quo isn't so bad. And if you're worried about equities, I'm not so worried about a Trump presidency either.
Okay, that's really interesting. Do you still align with a kind of a soft landing scenario? Is that where we're still at with the US, given the data that's come through?
We came into this year with a soft landing as our base case. In March, we moved it up to a no landing scenario, and that's really where we're at. You've got inflation that's not at the Fed's target. It's coming down, but it's not going to hit the Fed's target, especially if we get Trump elected, because his policies are just unequivocally inflationary. The economic growth, we think the U.S. potential growth in the long term is 2%. The U.S. economy is going to grow at more than 2% this year. So we call that a no landing, basically. Growth a little bit higher than potential and inflation above the Fed's targets. And that creates a pretty buoyant backdrop for risk assets and equity markets.
How comfortable are you with the earnings forecasts for U.S. corporates? Do they hold up in that relatively benign or at least relatively positive outlook in terms of the U.S. economy?
Yeah, that's key. If you do have a broadening of the rally, you'll start to see other sectors and other types of companies that aren't just this big mega cap trade that have really grown earnings this year. You will see a broadening of earnings, and you should see a broadening of the economic rally because you do have a lot more economic cyclicality in the bottom 490 of the S&P 500, and we do think those kind of companies will be rewarded if our base case does continue to play out.
At what point then, Patrick, do you want to be adding to those? What are the catalysts? At what point do you see a data point, you see a move from the Fed, you see a set of earnings, and you say, okay, let's pick some of these names up?
Yeah, so I own, in my global equity portfolio, I've got about 26% of it allocated to the mega cap tech stocks, and that's a lot. But the MSCI World is the same for me, actually. And the market's caught up to my view, so we have been top shaving these positions throughout this year. They've just had a tremendous rally. They're getting more and more expensive, but I don't want to sell them because I do think Powell will be cutting in September, and we're not in a bubble on valuations that I look at. The sensational 6 biggest stocks are trading at 31 times earnings right now on a blended 12-month forward basis. And the long-term average is about 29, so they're a little bit more expensive than they have been over the last decade. But if you do get some monetary stimulus from Powell in September, that could set off the stages of what may turn into a bubble. So I do think continuing to own these incredible companies, great profit margins, profitability, and secular growth is still there. There's some cyclical components to it, which I'm not afraid of anyway. I'm comfortable to own them, even though they are getting to lofty valuations.
Yeah, really interesting. And you talk about, so you touched on Meta there, Patrick, and maybe that would be a company you put on alert if you get a Trump presidency, with the caveats you put around that. NVIDIA, you tell us in your notes that you sold down 20% of your NVIDIA holdings. You still have a sizable exposure to that company. What was the trigger for that reduction in your exposure to NVIDIA?
It became a very large weight in my portfolio just because the growth is up so much this year that without us adding to it, the position started the year at 3.5% and was growing towards 6%. So we trimmed it down to 5% on profit taking. But at the start of this year, NVIDIA was trading at 29 times forecast, blended 12-month forecast, and it's up to 40 times. So earnings have grown at about 75–80% for NVIDIA, earnings estimates. But the stock is up 160%. So there is a bit of speculative froth in NVIDIA. It's the purest play on AI. The growth is incredible. Profit margins, incredible. Probably not sustainable in the long term. So we just thought it was prudent to top slice NVIDIA.
What is the key risk to the AI tech trade at this point, Patrick?
NVIDIA. It really is. That I think in the coming quarter, NVIDIA is going to meet and beat expectations because its customers are these big cap tech companies that have just hundreds of billions of dollars in cash and cash flow. They're going to keep spending on it. The market's rewarding it. But eventually, there will be competition, and then NVIDIA is going to lose some pricing power. And these big cap tech are not just going to have to talk about what they're doing in AI. They're going to have to show concrete results in terms of how they're generating profit from it. And I think that's going to be a little bit more difficult. So I think in the near term, this tailwind continues. 12 months from now, I do think you'll probably start to see some moderation in this.
Okay, so that's a horizon around maybe some of the challenges or more question marks for this tech rally, the AI tech rally, in terms of 12 months down the line and in terms of embedding and monetizing this technology. Patrick, before we let you go, other parts of the world in which you're seeing opportunity, whether that's in the equity space or beyond, is there anything in emerging markets that's standing out to you now that's looking attractive? Anything else in Europe besides the French story that is drawing your eye?
Very much Europe, UK, Japan, all of those regions look cheap to me. The MSCI world looks expensive because of the US component, 70% of it. But the rest of the world's cheap, not only versus the US, but versus their own measures as well. So they're trading at about 50th percentile on most measures on EBITDA, earnings, cash flow. And if I'm right on the economy, these companies are going to generate earnings growth. I think that you like that barbell approach right now, where you allocate to the US, you want to be in the best companies in the world, the dominant companies there, and have more cyclical exposure elsewhere that you're getting at a discount.
Really interesting. Patrick Armstrong of Plurimi Wealth, always fascinating on the broader macro, but also the individual names as well, with that view on allocating to the US, but also the barbell approach by adding some cyclical names as well. Patrick, thank you very much indeed. Coming up, Anne-Marie Holden's exclusive interview with Ukraine's President Volodymyr Zelensky. That is coming up in the next couple of minutes. Stay with us for that interview. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome to Bloomberg Markets. Now, China's President Xi Jinping reaffirming ties with Russian President Vladimir Putin on the sidelines of a summit in Kazakhstan. The relationship adding to Ukraine's worries as he and the country fends off Russia, of course, and plans ahead of a potential second Trump administration in the United States. Bloomberg's Anne-Marie Hordern spoke exclusively with Ukraine's President Volodymyr Zelensky in Kyiv.
We've had agreements about ceasefire between Ukraine and Russia, and Russia has been always breaking all the agreements and has been killing our people. So only if it's on some international forum in the presence of the countries, leaders who are trusted. They might have different ideas, different views on the stages, how this war will be over, but we all have to be on the same side. We have to trust each other. Trust is very important. The Peace Summit, by the way, has shown that we can follow this plan. Over 100 countries were there, and today we're talking about their nuclear security and energy security, and there will be a clear plan. So the ceasefire also needs a clear plan. We must understand that Russia would not be using ceasefire to simply accumulate equipment on the territory, our territory that they've occupied, because we will not be striking them. I mean, they can use that to create a strong fist here and then accuse us of breaking the ceasefire and start another invasion. So it's really complicated for us. It would take a significant loss for us if they invade again, as in the beginning of 2022, when they had almost reached the capital city. And they accumulated a lot of equipment on the territory of Belarus. And Belarus kept saying that, no, it's just the exercise. No occupation is in mind. It's just the training. It's just military games. It's very important. I really don't want to have this big trouble for my country, because we are at war already. Giving the advantage to Russia now, it's just impossible. We need to be smart. And it's important also who will be responsible for this, besides the Ukrainians who are paying with their lives. Which country will be responsible? It's easy to just talk about ceasefire, but it's very difficult to enforce it, to keep it. It's very difficult to find those who will respond why the ceasefire.
But we're going to see more calls for a ceasefire, especially as the world politically is moving to the right and potentially moving to the right in the United States. You have said this war is dependent on U.S. aid. I want to ask you, did you watch the presidential debate between Joe Biden and former President Donald Trump?
So, first and foremost, the ceasefire is an important element in any plan to finish the war. So, a ceasefire is not finishing the war. We've been there. It would be just a frozen conflict. And it would be frozen for the aggressor, it would be frozen on our territory, and our people would be under the occupation. This gives a clear advantage to one side. That's why it's easy to offer different proposals of ceasefires. But what's important? It's important to find answer what would come after. It's the matter of not just the victory. There are many people talking about ceasefire, and it's fine that people are talking, but what would happen next? That is the question. For example, what's the next step? What's the third step? what would be the step when Putin breaks the ceasefire? After the ceasefire, a month after the ceasefire, will he pull out the troops out of Ukraine? Who guarantees that he will pull the troops out of the occupied territories? And there's silence. Nobody has answer. I'm not accusing. I just want to explain that we are at war and we understand this. So, the debates.
Well, I because the answer of how this might all unravel will depend on also who's at the table from the United States.
Amongst other things, it might depend on who is the president of the US. Yes, that's a fact. Because the US, the United States of America, today are probably the most powerful player. So the matter whether the United States would be the major international player, whether they want that, or they want to focus more on their internal politics. I cannot say, it doesn't depend on me.
So did you watch the debate?
Yes, I watched the debates. So, first and foremost, I want to say, I don't know, maybe it would be out of tune to what we see in the US media, but I watched, and we are not electing the president of the US, so I didn't look at the incumbent president and the former president. I looked at them in terms of Ukraine.
President Trump said he'll end the war before he's elected.
Yeah, I heard
What do you make of that?
Я скажу честно.
Let me be frank. For example, well, the decision is on US public. But let me just have some reasoning. Так, але для вас це важливо. Yes. So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? We didn't the war even to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
That, of course, was Ukrainian President Volodymyr Zelensky in an exclusive interview with Bloomberg's Anne-Marie Hordern. At this point, let's bring in EMEA News Director Ros Mattison for the context on this. Ros, you've been watching this interview. What stood out to you from what we've been hearing from the Ukrainian president?
Well, it really stood out like a keen sense of being attuned, that Ukrainian president to the global environment in which this war is happening. Obviously, he's very focused on what's happening on the ground with Russia militarily, but he's also very aware of all the shifting pieces which are important to Ukraine in terms of continued military and financial support. So he's watching politically what's happening in a bunch of places, obviously in Europe with the French second-round election coming up and possible changes there in the parliamentary mix. You've also got the US election, and obviously that's a very big one for Ukraine in terms of continued financial and military support. If you've got a change of administration in the US, if Donald Trump does come in as president, he's pretty much said he's going to cut off aid to Ukraine. He's also said he's got a plan, apparently, to end the war immediately. He hasn't really explained what that plan is, but it's very clear that Ukraine could face quite a different geopolitical environment around it in 6 months or so.
Could Ukraine survive without that military aid coming from the US if, and it's still hypothetical, Trump wins in November? How precarious would the situation be for Zelensky and his country?
It would make Ukraine very, very fragile. I mean, obviously, they've started to ramp up their own domestic military industry. There were vestiges of that from the Soviet era, a lot of expertise actually in Ukraine, you know, shipbuilding and submarines and so on. But, you know, that's still pretty small. And Europe really, can they step up to the extent the US was supplying and fill that void? Very, very difficult to see that happening, and also doubts in Europe even about that level of support. And that leaves Ukraine very, very fragile and vulnerable in a military sense. And therefore, again, if Russia feels like it's got the upper hand at that point, Vladimir Putin's got the upper hand, is he really going to want to negotiate an end to the war? Won't he just push on? So you can see that the concern there for Ukraine, that they need to have some kind of sense of certainty beyond the end of this year.
What is NATO saying? How have they been adjusting their support and their backup for Ukraine at this point?
Well, NATO has been a strong support for Ukraine throughout, but obviously, again, the element of Donald Trump potentially winning in the US. And Donald Trump has made very clear that he's got concerns about NATO. He's got concerns about some member states in NATO. He's even suggested he won't actually militarily support some NATO members if he feels they're not contributing enough financially to the broader good of NATO. You start to defray, you know, just fraying the edges of NATO unity and that collective defence spirit. So you could chip away at that on NATO. It makes it harder for NATO to remain united when it comes to Ukraine.
What is the situation right now on the ground in Ukraine? A couple of months ago, we've been speaking about the offensive that Russia have been pushing through, that they've been making gains. Are we back to a stalemate? Are the weapons getting that US money, military aid and hardware? Is it getting to the front lines? Where do we stand on the conflict?
Well, we're hearing just today that another town that's quite strategic in the eastern part near Donetsk is at risk of falling, and that's the Ukrainian retreat from that town. So Russia's not making massive gains, but they're holding the territory that they've got, and that's the key. Ukraine's really struggling to take that territory back. And so when you look at a map, Russia does actually occupy quite a significant part of the east and the south of Ukraine. And as time goes on, the more time goes on where they just hold that land, it becomes more of a fact. It's very harder to dislodge them. And if you get to a point of negotiating, you can see where lines start to get drawn on a map. So for Russia, in a way, it's not necessarily about pushing, you know, further afield, perhaps even to Odessa. But for Ukraine, the challenge is to take that land back.
What are the changes in the political landscape of France mean for Ukraine? If Marine Le Pen, the base case seems to be right now, of course we'll get the answer after Sunday in the second round vote, the base case seems to be that possibly they become the biggest party, but they don't have the majority, Marine Le Pen's National Rally. They used to be pretty closely aligned, or at least fairly favourable, it seems, to Russia and Vladimir Putin. They've adjusted that view. How concrete is the support for France in that scenario for Ukraine?
Well, it could get quite a bit trickier. As you said, Marine Le Pen has softened her language a bit. She says she does support Ukraine and the cause of Ukraine, but that's a bit of an open-ended question. What does that mean? Does that mean willingness to keep sending a lot of money to Ukraine, weapons to Ukraine? Do these decisions in the French political context become a lot harder if you've got, you know, parliament that's dominated by these right-wing parties, including Marine Le Pen's outfit, and perhaps even they've got the prime ministerial position in France, and you've got a sort of a cohabitating government there. That makes it much more complicated for France to be taking the lead. And we've seen Emmanuel Macron as president be really forceful on the behalf of Europe, really taking, you know, some of the lead and pushing for support for Ukraine alongside Germany. And does that become harder as well? So a lot of quite difficult questions for Ukraine going ahead.
OK, Ross Matheson, EMEA News Director, on the implications, of course, of the politics of France and the US for Ukraine, on the back, of course, of that exclusive interview, Anne-Marie Jourdan, with, of course, Vladimir Zelensky of Ukraine. Still ahead, we're going to get the views in terms of how the Eurozone economy adjusts to the politics with Berenberg's Holger Schmieding. That is coming up in the next couple of minutes. Stay with us. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to Bloomberg Markets. Happy July the 4th for all of you out there in the US in particular. European stocks posting gains of 0.7%. It's risk on. French stocks also performing relatively well as we lead up to the second round of voting. We'll get some analysis on that. Currently, the CAC current up 0.8%. And the FTSE 100 here in the UK up just shy of a full percentage point. S&P E-minis, of course, markets closed today. Looking ahead to the US opening and reopening on Friday, of course, non-farm payrolls will be consequential. S&P E-minis currently pointed to gains of 0.1%, looking to build on the records, another record that was punched through, of course, by the S&P on Wednesday. Euro dollar, the single currency gaining in the session today. A bit of dollar weakness is aiding that story. 108 on the single currency, up 0.1%. And Bitcoin under pressure for the third straight day. This is a level we haven't seen since about February, 57,000 on the largest cryptocurrency by market cap, down 3.5%. Let's get to France now, where the country is holding its second round vote, as I mentioned, on Sunday. It's a final push, of course, by President Emmanuel Macron's centrist alliance and the left-wing New Popular Front to push Marine Le Pen's far right back in terms of the gains that have been made and try and stop them getting that majority. Let's get the details then from our reporter based in Paris who's been following all of this for us, of course, Phil Serafino. Phil, where are we? Where do we stand in terms of how these parties have been aligning to try and close the door on the national rally and the response as well from Marine Le Pen?
Yeah, I think the big surprise has been the unity that the other parties have shown in the face of the national rally's performance in last Sunday's election. The left-wing alliance, the New Popular Front, and Macron's centrist group, they've gotten together basically and agreed to pull candidates in three-way races or four-way races to increase the chances of beating national rally candidates. That has undermined Marine Le Pen's party's chances of getting an absolute majority in Sunday's election. There's a poll out today showing that she might get 190 to 220 seats in the National Assembly. You need 289 for an absolute majority, and she was very critical last night of the other parties for doing this, saying it's kind of thwarting the will of voters. But this is setting up a situation which we haven't seen in France in a long time, where the election may happen on Sunday and there may be no party with an absolute majority. And then the question becomes, who does Emmanuel Macron turn to form a government, and what does that look like?
Yeah, so the political arithmetic is going to be key, isn't it, across the National Assembly. Phil, how does this play out in the hours, the days and hours ahead then, as we lead up and on the back of that vote? When do we start to get a clear picture as to how things are lining up and then that potential backroom trading, horse trading between the different political parties?
You know, the polls close 8 p.m. Sunday night. You will get exit polls almost immediately. Official results sometime thereafter. You can imagine the horse trading begins Sunday night. Certainly Monday will be a crucial day where people can take a breath, look at the results, take a step back, and begin to see what a government might look like. It'll be interesting to see also how the markets react to this. The markets have sort of come to terms with the fact that Macron is not going to be, his party is not going to be leading the government after Sunday's vote. That much seems clear. And so Monday is really the key day where people take stock and begin to do that horse trading.
How damaged is Emmanuel Macron? Even in a scenario where the National Front doesn't get a majority, they could end up still being the largest group within the National Assembly. What in that scenario does it mean for the standing of Macron domestically and internationally, Phil?
Well, domestically, I mean, it's already clear that he will not be setting the agenda for legislation. You know, he has been very pro-European, pro-business. The markets have liked what he's done generally over his time in office, his 7 years. The domestic agenda clearly will be set by whatever government they can cobble out of these election results. In the French system, the president, though, is the one who handles foreign policy and is on the international stage. It will be a diminished presidency, though, if he's also not in control of the domestic part of the agenda. So going forward, it's going to be a very different look for Emmanuel Macron.
Does any policy get pushed through, or does the policy just freeze up in France? And is it case by case? Do they still take laws to the National Assembly? Do they work through and push through some policy on a kind of case by case basis, or does all of that just freeze up?
That's the great unknown. You know, Gabriel Attal, who's the current prime minister, that's what he says is, look, we can do policy on a case-by-case basis. A piece of legislation will come up, and we will cobble together a majority that supports that particular piece of legislation, and those majorities might change. That sounds good in theory. It hasn't been done in practice in a long time, and there's a lot of bad blood between these political parties on the left, in the center, and on the right and far right. So it will be quite a feat to get them to work together on a case-by-case basis on legislation. They haven't managed to do it in the past couple of years.
Okay, Phil Serafino, really important update out of France, of course, as we lead up to that second and final round of voting on Sunday. Phil Serafino with the details. Thank you very much indeed, joining us from our Paris bureau. For more on France and the Eurozone in terms of how this impacts the economy, let's bring in Holger Schmieding, Chief Economist at Berenberg. Holger, we've got to hold on to our hats then as we look to Sunday. How are you thinking about the impact this all has on France? Is the economy of France immune to the politics?
No, it definitely is not immune to the politics. We are almost certainly facing the end of Macron's reform drive, which has done the French economy a lot of good, even in the best case scenario, which now probably will play out, namely a hung parliament in which neither the united left nor the far right has a majority to press their agendas forcefully. Even in such a hung parliament, we would be in a situation where in France, if anything changes, it would likely be a modest reform reversal here and there. There are unresolved fiscal issues. The French reputation as a good place to do business has probably been impaired a bit by the realization, okay, Macron can no longer push pro-growth reforms. So this is not gearing up to be an immediate financial crisis, but this is gearing up to be a drag on the long-term performance of the French economy.
A drag on the long-term performance of the French economy. What does that drag look like, Holger? How are you adjusting your outlook for the French economy?
Well, a week ago, we changed our growth forecasts modestly. We took them down by 0.2 percentage points for next year and the year thereafter. That doesn't sound like much, but that is a new assessment of trend growth. And if, say, in the future, each year you have 0.2% growth less than you would have otherwise had, that adds up, especially as I'm afraid financing costs for France will remain elevated relative to what they were before. So this combination of less trend growth and high financing costs and a president who is no longer able to push, say, pro-growth fiscal reforms, unemployment insurance reform, which would have saved money and given incentives to work, all that adds up to mounting fiscal challenges over the long term.
Holger, I want to go back to what you said in your first answer about the success, the relative success of Macron's reform agenda, and put to you the case from Thomas Piketty, the economist, of course, famed economist in France. He was writing in the Guardian newspaper a couple of days ago, and he said, look, the far left, that left alliance, would not be that harmful. In fact, it would be positive for the economy of France, that the reforms of Macron have clearly not filtered down to the people in France, that the wealthy have benefited, Wall Street has benefited by expanding their exposure in Paris, but the people of France have not felt it. And he was saying that their agenda, the leftist agenda, of funneling money into renewables, of getting workers and having them have more say in terms of the running of corporations, higher taxes on people earning over 400,000 euros, that would reduce or at least push through real and concrete and sustainable growth for France.
First of all, that is complete nonsense, I would say. What the full leftist agenda would have meant is a significant rise in borrowing costs, which is bad for the ability of the government to support people. It might actually benefit those who actually own bonds or are able to lend money to the government in the future at higher rates, which is that it would have benefited more the rich than the poor. Looking at Macron's reforms, the key result has been a significant rise in employment, a drop in youth unemployment. That is an improvement exactly where you need to see it for those people. Of course, Macron, like many other incumbents, have had bad luck, namely that the surge in energy and food prices caused largely by Putin has, of course, hit lower income people more than those with higher incomes who spend less of their income on food. So that many people at the low end do feel that they are worse off is something that has nothing to do with Macron's reforms, but is a consequence of what we've seen in energy and food prices recently.
The long-term drag on the French economy that comes through as a result of these political changes, Holger, what are the implications for the ECB? Does it pull forward or at least ramp up the rate-cutting cycle from the ECB when they do go again?
Actually, it should not, because what I'm afraid of is not that the immediate demand outlook changes a lot, which would be an issue for the ECB, but I'm afraid that the long-term outlook for French supply actually changes. Sorry. And what that could mean is actually that we get a bit less growth, that the balance of supply and demand shifts towards a bit less growth and slightly higher inflation. Because what supply-side reforms do is they improve the balance between growth and inflation, and what, say, no further supply-side reforms and probably a small reversal here and there would mean is less trend growth and slightly higher inflation pressures for the future. So for the ECB, this is no reason at all to do it, to accelerate its rate-cutting cycle.
Holger, I'm conscious of the fact that we are quizzing you with multiple different questions, and maybe your voice is being challenged by this. We'll keep you on the line, of course, but if you have the water there, go for it. I'm going to check on the euro for you right now, because I want to get your views, given what you've just said about the ECB, around the single currency. We're seeing a little bit of strength for the euro right now, up 0.1% at 108. What are the challenges for the single currency then, given everything you've said about the top side in terms of French growth coming off and the reaction function from the ECB? You said they shouldn't adjust in terms of what we're seeing around France. Is there a vulnerability to the euro at this point?
Well, I don't think there's a huge vulnerability to the euro at this point, unless the result on Sunday is very different from what now the opinion polls do project. The risk of an immediate financial crisis in France, if, say, the far left would have been able to implement its full expensive agenda, or if the far right had taken complete control and dropped all moderation, that risk seems to be much reduced. So near term, I don't think this should put negative pressure on the euro. Of course, longer term, that France is no longer exactly the good, fast-growing country that in relative terms in Europe it actually often was under Macron. That is not a positive. But once again, relative to some of the challenges which the US is facing, for instance, in its own fiscal space, in its own political arena, Europe is, well, not all that bad.
Okay, well, on the US then, non-farm payrolls on Friday. Are we starting to see that labour market looking a little bit more fragile in the US? We were hearing from Jay Powell, the balance of risks between inflation and jobs. What are you going to be scrutinising in terms of the data out of the US on Friday?
Well, of course, we'll be looking at the non-farm payrolls as to whether they finally show what most other labour market indicators show, namely a softening of the labour market. But so far, what we see in job offers, what we see in other aspects of the labour market is a softening towards, you could call it, a more or less normal state from a state that used to be hot half a year ago. What we are not yet seeing is a significant drop of labour market dynamics into a very cool, a kind of half-hard landing period. The labour market likely is normalizing with some probability that it will be a bit below normal temperature in the second half of this year. but the economy remains well supported by fiscal spending. It remains well supported by at least parts of consumer spending, especially by those on the middle and higher income spectrum. So all in all, I do not expect the labor market to soften too much, but a little bit of softening is probably on the cards, including the data we will see tomorrow.
Okay, a little bit more of softening. Holger, the market's pricing in two further cuts, or two cuts, I should say. They haven't cut yet, of course. Two cuts, starting in September, then again in December for the Federal Reserve. Does that seem rational at this point? We were speaking to Alberto Gallo of Andromeda earlier on in the show, and he said that it's going to be one and done for the Fed because the dynamics have changed.
Well, our forecast is there will be one cut, not two, but I do admit a significant probability that there might be two cuts. The economy is softening, inflation is coming off a bit, but the underlying inflation dynamics probably remain somewhat resilient, especially as wage growth is softening only modestly. And that we have in services inflation, in core inflation, a few factors that will likely keep inflation on a track that goes down, but only so slowly that it would make more sense for the Fed, in my view, to delay the first cut until after the election. If they cut on not clear evidence that they should cut in July or September, they might be accused of interfering in the US election campaign. So unless the data are very clear, you need to cut in July or September, I guess they'll probably wait until December before they start the cutting cycle.
Okay, the case for waiting from the Fed until maybe November, given the politics, and that, of course, would be a fillip to whoever is in the presidency, or at least whoever wins. Of course, they would take over that office in January. Holger Schmieding, thank you very much indeed on the view, of course, around the adjustments to the French economy as well, and the longer-term drag given the changes around the National Assembly that are expected after that second-round vote on Sunday. Holger Schmieding, chief economist, of course, at Berenberg. Thank you. Coming up next, BNP and AXA are looking at a possible joint venture which could create one of the largest firms in Europe. The details on that story next. This is Bloomberg.
The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
DOJ or other authorities
could face bigger challenges.
It was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to Bloomberg Markets. The handoff, of course, from the fresh records that came through on a shortened session in the US, being felt here in Europe. European equities are risk on right now. The stock 600 up 0.6%. Here in the UK, the FTSE 100 posting gains of 80 points, up a full percent. The CAC current over in France gaining 0.8% ahead of the second round vote, of course, the parliamentary elections that close out on Sunday evening. The DAX over in France, a slightly more modest upside, but still posting gains over in Germany, up 0.4%. The S&P E-minis, happy July the 4th, of course. The US session closed, but we look ahead to Friday. S&P E-minis looking to modest gains of 0.1%, building on that record that came through on Wednesday. 108 on the single currency, up 0.1%, and Bitcoin under pressure for the third straight day at 57,300, down almost 4% so far. Now, Bloomberg reporting that BNP Paribas, we're switching to deals now, and AXA are mulling a joint venture worth 1.4 trillion euros. The move could create one of the largest European firms by assets under management. Bloomberg's Alexander Rajbandari joins me now from Paris for the details. Alex, what do we know about this potential tie-up then?
Hi, Tom. Well, so the talks are quite early stage, not particularly advanced, but AXA and BNP are looking to potentially tie up their asset management units into a joint venture. It remains to be seen whether, talks are going to actually go through and lead to a deal. The question of control is going to be key because in the past, asset managers have been walking away from deals whenever they could lose control. So it's going to be interesting to see how that plays out.
Yeah, indeed. So what are we watching for then in terms of how this deal formulates, Alex? I mean, 1.4 trillion in terms of AUM, if indeed we do get this joint venture. I mean, and more broadly, what it means for this particular sector.
So, asset managers across the globe have been racing to gain scale because that allows them to be more competitive in an environment with margins and fees under pressure. Europe is no exception. There's one player that's been growing to become the biggest in Europe with the strings of acquisitions. It's Amundi. People now, other asset managers across the continent are trying to, catch up with them. If this deal was to go through, actually, they would have 1.4 trillion in euros assets in assets management. It's quite good. Amundi has more than 2 trillion though, so there's a lot. There's some room to grow still for them.
And look, you touched on this, Alex, but in terms of consolidation within this space in Europe, is this a step change? Is this a gear change towards further consolidation? How do we read into that story?
Well, the consolidation talk has been quite present for a lot of for the past years, I would say. It's been heating up recently for several reasons. When you look at BNP, for instance, they've been looking to deploy the billions of cash they have pocketed after the sale of their US retail unit. So they've been quite, the hot topic for bankers here. And people have been, it's kind of obvious that they were underexposed in asset management. So that was an area where they could grow. So that is actually kind of driving, the talk here. However, well, for a long time, many asset managers were for sale, but when you talk to bankers here, they all say the same, that those teams know their worth and they are willing to sell for quite an expensive price. So it was deterring further moves in the past years.
Alex, how are regulators in Europe, in Brussels, likely to look at this kind of tie-up? Does it get the green light, or is there going to be scrutiny? Is this something that's going to draw the attention of Europe's regulators?
I would say it's very early and way too early to know about this deal in particular. Amundi has been showing that, you can actually do some consolidation, either buying, some of similar firms like they did with Pioneer in Italy, but also buying significant chunks of other firms or firms that are more specialized. I would think about the latest deal with Alpha Associates in Switzerland, where they went into private market, which is kind of a hot topic in the sector. Also elsewhere, they have been announcing that they would merge their US unit with Victory Capital in the US. They've been looking at opportunities in Asia before. So this deal is domestic. It's, of course, there will be some consideration in terms of competition. The jury's out. It's not really clear whether it's going to be frowned upon at Brussels.
Okay, so still a long way from that, Alex. And you talk about the private markets and the fact that there's a lot of activity there. What is it about the private markets of Europe that's kind of drawing that focus and generating a lot of this activity?
Well, when you look at what Amundi has said, for instance, when they bought this boutique in Switzerland, for them it kind of drives diversification for them. There was a push for passive investment strategies in the past. Private markets is where yields are now, and so apart from Amundi, you saw BlackRock buying infrastructure recently. There's yields more, and is very profitable at the moment and kind of attractive for investors.
Yeah, the profitability and the yield story of the private credit market within Europe, the private markets. Alexander, thank you very much indeed. Raj Bandaru, the details around that potential proposed tie-up between AXA and BNP Paribas around an AUM, potentially of around 1.4 trillion. We look to see if that does get firmed up. Now, let's take another look at Anne-Marie Hordern's exclusive interview, switching focus, with Ukraine's Volodymyr Zelensky and the possibility of a second Donald Trump administration. Let's take a listen.
So let us imagine that the winner might be Trump in November, and he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world, and we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't start. It was Putin who started it. But I hope you agree that it will be fair. If Trump knows how to end this war, he should tell us today, because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
Ukraine's Volodymyr Zelensky, of course. Coming up, Sonia Martin of DZ Bank, again, on how to think about the political risk, inflation, central banks, all of that coming up. There's a lot more market analysis. Stay with us. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. How does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group, where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to Bloomberg Markets. I'm Caroline Hyde in New York. Here are the top stories that we're following. On this 4th of July, pressure grows on Joe Biden to drop out of the presidential race. Democratic governors, they emerged from a crisis meeting saying they back Biden. Investors grapple with the political uncertainty. The UK votes today, and France heads to the polls for a critical election on Sunday. But deals still brewing as French firms unite. AXA said to be weighing a joint venture with BNP Paribas Asset Management that could create one of Europe's largest players. But first, let's just check on these markets, shall we? S&P 500 futures is all we can really be focusing on at the moment. And, you know, we've been at record high after record high. There's, of course, been a key focus on what's been happening across the markets more broadly and the economy. That slowdown in ISM services yesterday, pointing for a weaker dollar at the moment, once again down for a second straight day. But we are seeing the European stocks actually up the most since June the 24th, despite that political risk in France, as the UK heads to the polls today. And indeed, we keep a close eye on what's happening in the world of crypto, though, Bitcoin under pressure, even with a weaker dollar. Now, that seems to be more issues about the German government selling some crypto that has been confiscated, and indeed what Mt. Gox might be doing. So supply side issues there, as well as what it would mean if we do see a different leader for the Democratic Party, and who therefore could win out, because Trump's seen as a pretty pro-crypto leader of the United States. I'm looking at what's happening in the futures market for the NASDAQ as well. Look, keep a close eye on tech stocks. They have been the bread and butter of this market rally throughout the first half of the year. And you've got to be keeping a close eye on what's happening with the euro as well as we head towards the polls in France come Sunday. That political risk may be being factored in more broadly, and maybe we've actually seen some sort of price stability. And look, Asia actually had a really strong trading day, and we're seeing the MSCI benchmark really up once again. I'm looking at some individual movers, and we'll get to some of these individual stories later in the show. Look, AXA, key insurer in France, doubling down on perhaps focusing in on its investment management part, and actually forming a joint venture with BNP Paribas Asset Management could really create one of the biggest players in the market. Keep a keen eye on Continental, looking like they're having some good tire growth in China. Remember, EV sales have been on fire in China as well. And lastly, we want to keep an eye on a Spanish company that actually is poaching a member of Bank of America, Merrill Lynch, to become its CFO. More on that a little bit later. But all of that corporate news has to be baked into what's happening in the economy right now. And look, we are trying to pass through what is a resilient but slightly weakening US economy. Political risk in Europe, what does that mean for ECB policy? And more broadly, how is Asia continuing to ramp higher? And what does the BOJ do in the face of the yen as well? Let's dig into it with Sonia Martin, DZ Bank, head of FX, monetary policy, been at this game for many a decade. And Sonia, when you're looking, let's start first and foremost with the US dollar. It's down for a second day. This seems to be on the back of some weakening data, particularly the services data. But I'm interested as to whether you think the US economy is going to have some sort of calmer slowdown, or whether we might get any sort of jolt due to political risk that we're seeing at the moment.
Well, I think, as you said, I mean, the data currently is definitely pointing to a slowdown. You know, I like to always look at the Bloomberg Surprise Index for the US, which is a great indicator of, you know, where the data is coming in particular relative to expectations. That index has been in negative territory and is falling, and that is clear evidence of a slowdown. I think as to the future of the U.S. economy, all will really depend on who becomes president in the autumn or winter, because that is going to have a massive impact on growth. You know, in a Biden scenario, we're looking probably at solid, not massive, but solid growth, fairly evenly spread throughout the quarters when you look ahead into next year. With Trump, it would obviously be a lot more volatile, massive boost probably in the beginning, then a slowdown. So it really depends now. I think overall the outlook is solid, but it's not exactly Goldilocks either.
Okay, so not exactly Goldilocks. Can you just spell out how you are trying to price in what a different leadership at the White House would mean for markets? Many have started to feel that if indeed we did get a Trump presidency, that means, well, you're going to be seeing some pressure on fiscal spending, i.e. more of it, and therefore pressure on bonds, particularly at the long end. Is that something that you've been factoring in from a dollar perspective too?
Yes. I mean, the thing is, last time that Trump was elected president, we were all expecting some pretty horrible market reactions, and we obviously have learned our lesson. And so we're looking ahead now. If Trump does win the election, I do think the dollar is going to benefit quite significantly. And that is partially because we were looking at, as I said, stronger growth in the beginning. You know, he is going to be cutting taxes. That means more investment. That means more consumption. That means improved sentiment. And, you know, the fallout from this, the fiscal fallout from this, that's going to come a bit later. So I think at first, we're probably looking at a stronger dollar. And we have a euro-dollar parity call for the Trump scenario, certainly in the first sort of 3 to 6 months of his presidency. In a Biden scenario, we know it's a lot more moderate. So that makes a big difference. And in terms of the bond market, yes, absolutely, it is a fiscal problem. They already have massive issues. But to be honest, I'm not sure if it's that different whether we had Trump or Biden. In both cases, we're looking at more deficit spending.
Let's pivot, therefore, to your euro-dollar call. And if we did indeed get parity, we have been speaking with the ECB. Of course, amid the political risk that's currently happening in France, the ECB has been lent upon us to understand how they might cater to any political fallout. And, well, the feeling has been they wouldn't, of course. They have more monetary policy. Yeah. They're not exposed to politics. Just take a listen, Sonia, to what Peter Pratt had to say to us, a former ECB chief economist, just earlier.
Markets are quite satisfied by a sort of hung parliament or, a sort of government not taking a lot of decisions up to the presidential elections. People would love, to get, 70 basis points extra spread compared to the bond without tail risks, with the expectation that if really things go wrong, the central banks will intervene. I mean, this sort of moral hazard is, I would say, unacceptable. And I personally think that the markets are a bit too optimistic about the situation and the transition to the presidential elections in 1 year.
How do you feel about moral hazard? How do you feel about, well, the ECB moving from its trajectory of cutting rates?
Well, I mean, moral hazard is obviously a massive problem for the ECB. The market has become very used to this sort of intervention by the central bank. The ECB coming in to mop up the mess whenever it happens, and it's going to be very difficult, if not impossible, to change that mindset. I mean, there are people in this market who do not know anything else. All their reality has been of the ECB having this massive presence in the market, and the ECB is sitting on a huge pile of papers. So it is very difficult. And I think, while the ECB has been trying to impress upon governments in Europe that they need to be more fiscally responsible, the reality of the matter, unfortunately, I believe, is that if push comes to shove, Italy or France, they're probably more in the driving seat. The ECB is not going to drop them. So there is a moral hazard, but I think it's already happened, and it's going to be very difficult to change that.
What we might see change if we go around the world is finally some intervention from the BOJ again, and maybe a push towards a different style of monetary policy there. What are you making of, once again, a day of Japanese yen strength?
Well, I mean, the BOJ is in an incredibly difficult position that they, let's face it, have maneuvered themselves into. They did change monetary policy. They have started to high grades. They have signaled that they will continue to high grades. They have talked about changing the asset purchase program. They have made some adjustments already. The problem is they do all these things and then they talk it down. They have taken action, but their words are so dovish that all the market takes away from that is that they're still really expansionary. And that's the problem that the yen has. You can intervene and they might have to intervene again. The market is clearly pushing in that direction, but that's only going to achieve temporary respite. What they need to do is they need to be more decisive, more aggressive in their actions at the upcoming meeting at the end of July. I, however, fear, given their track record of late, that they're not going to do this. And then, fundamentally, the yen remains incredibly vulnerable, and intervention is only treating the symptom. It's not going to fix the underlying problem.
It's tough for a Japanese consumer, but pretty good for a stock market of late. Sonia Martin, it's been so great speaking with you of DZ Bank. Stay well. Have a wonderful rest of your week. Meanwhile, coming up, President Biden getting a vote of confidence from just some in his party. We take a look at the presidential election next and, well, who, if anyone, might replace him. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
I'm here to tell you today, President Joe Biden is in it to win it. And all of us said we pledged our support to him because the stakes could not be higher.
None of us are denying Thursday night was a bad performance. It was a bad hit, if you will, on that. But it doesn't impact what I believe. He's delivering.
The president was very clear that he is in this to win this. And the president is our nominee. The president is our party leader. And the president has told us, and he was very clear back there, that he is in this to win this.
Democratic governors offering support for President Joe Biden, despite the calls, of course, for him to step down. Now, the president has faced criticism coming off of his performance at the debate against Republican challenger Donald Trump. That was last week. Joining us now, Bloomberg opinion columnist John Orthus in London, who can beautifully weave together what on earth the markets are making of some of this topsy-turvy happening on Capitol Hill. And
yes.
Ultimately, John...
All our American viewers need two Brits working on the 4th of July to take them through this. So,
the irony is not lost on anyone, that we are the ones that are working on. I mean, but then take us back to all the infighting that we see, the show of force from certain governors, but just the noise is relentless. And is the market factoring in that noise?
Yes, I think it is. I think I've had a lot of fun looking at the betting markets this morning, which shows that Kamala Harris has now, for the first time, overtaken Joe Biden in terms of her odds of getting the presidency. That's pretty drastic. If you combine all the 4 Democrats for whom you can get contracts, which is also Gavin Newsom and Michelle Obama, then it looks bad, but nothing like as bad as it does when you just look at Biden. Trump's chances of winning are still regarded as something like 53, 54%. So I think the market is assuming that Biden probably cannot survive this, but that's not necessarily terminal for the Democrats' campaign. I think that might be broadly right, and so what you see is a slight calibration in things like the bond market to take in the increased chance that Donald Trump is going to win this. They thought he was going to win before. They think that a little more clearly now. It's still far from a done deal, so I think that's where the market had reached before everybody went off to enjoy the 4th.
So let's talk about what the bond market therefore thinks. It prices in what Donald Trump being, well, more anti-trade, more tariff-prone, and more fiscally expansive. So how does that factor into a bond market purchase or sell?
That factors in largely, I mean, the extremely ugly phrase is that it's a bear steepener. So the long end of the curve, 10 years, 30-year yields, rise quite sharply, while the short end of the curve, which is more affected by monetary policy, doesn't move that much. That's what we saw. I think it can be overstated, but you did see quite a sharp move higher in 10-year yields in the last few days after the debate, and that reflects exactly as you were saying. Trump is tariff man. He says he's going to raise tariffs. That would be inflationary on the face of it. He also says he's going to cut tax. Can make plenty of good arguments that would be a good idea. In the short term, it's going to be inflationary and it's going to be bad for the bond market. So there is a bet on, and interestingly, you also saw this in 2016. Immediately after he was elected in 2016, obviously very surprisingly at the time, you saw bond yields really scoot higher, but stocks also did well. There's a belief that that Trump is good for stocks and bad for bonds.
I sort of feel that inverse relationship keeps breaking down on us no matter which way we go. But
I can imagine that, yes.
John Authers, it's a joy to have another Brit on. Happy 4th over there in the UK.
You too.
Of Bloomberg Opinion. We appreciate it. Meanwhile, still ahead, part of our exclusive interview with Ukraine President Volodymyr Zelensky. Look, his outlook for a potential ceasefire, what he makes of Trump's call that he could expedite any sort of ceasefire. This is Bloomberg 10 on. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg Markets. I'm Caroline Hyde in New York. Now, NATO allies have agreed on a $43 billion funding target for Ukraine. That's according to alliance diplomats. Bloomberg sat down exclusively with the Ukrainian President Volodymyr Zelensky and began by asking, well, about a possible ceasefire.
Домовлялись сторони про ceasefire. We've had agreements about ceasefire between Ukraine and Russia, and Russia has been always breaking all the agreements and has been killing our people. So only if it's on some international forum in the presence of the countries' leaders who are trusted. They might have different ideas, different views on the stages how this war will be over, but we all have to be on the same side. We have to trust each other. Trust is very important. The Peace Summit, by the way, has shown that we can follow this plan. Over 100 countries were there, and today we're talking about their nuclear security and energy security, and there will be a clear plan. So the ceasefire also needs a clear plan. We must understand that Russia would not be using ceasefire to simply accumulate equipment on the territory, our territory that they've occupied, because we will not be striking them. I mean, they can use that to create a strong fist here and then accuse us of breaking the ceasefire and start another invasion. So it's really complicated for us. It would take a significant loss for us if they invade again, as in the beginning of 2022, when they have almost reached the capital city. And they accumulated a lot of equipment on the territory of Belarus. And Belarus kept saying that, no, it's just the exercise. No occupation is in mind. It's just the training. It's just military games. It's very important. I really don't want to have this big trouble for my country, because we are at war already. Giving the advantage to Russia now, it's just impossible. We need to be smart. And it's important also who will be responsible for this, besides the Ukrainians who are paying with their lives. Which country will be responsible? It's easy to just talk about ceasefire, but it's very difficult to enforce it, to keep it. It's very difficult to find those who will respond why the ceasefire
But we're going to see more calls for a ceasefire, especially as the world politically is moving to the right and potentially moving to the right in the United States. You have said this war is dependent on U.S. aid. I want to ask you, did you watch the presidential debate between Joe Biden and former President Donald Trump?
So, first and foremost, the ceasefire is an important element in any plan to finish the war. So, a ceasefire is not finishing the war. We've been there. It would be just a frozen conflict. And it would be frozen for the aggressor, it would be frozen on our territory, and our people would be under the occupation. This gives a clear advantage to one side. That's why it's easy to offer different proposals of ceasefires. But what's important? It's important to find answer what would come after. It's the matter of not just the victory. There are many people talking about ceasefire, and it's fine that people are talking, but what would happen next? That is the question. For example, what's the next step? What's the third step? What would be the step when Putin breaks the ceasefire? After the ceasefire, a month after the ceasefire, will he pull out the troops out of Ukraine? Who guarantees that he will pull the troops out of the occupied territories? And there's silence. Nobody has answer. I'm not accusing. I just want to explain that we are at war and we understand this. So, the debates.
Well, I saw because the answer of how this might all unravel will depend on also who's at the table from the United States.
Amongst other things, it might depend on who is the president of the US. Yes, that's a fact. Because the US, the United States of America, today are probably the most powerful player. So the matter whether the United States would be the major international player, whether they want that or they want to focus more on their internal politics. I cannot say, it doesn't depend on me.
So did you watch the debate?
Yes, I watched the debate. So first and foremost, I want to say, I don't know, maybe it would be out of tune to what we see in the US media, but I watched. And we are not electing the president of the US, so I didn't look at the incumbent president and the former president. I looked at them in terms of Ukraine.
President Trump said he'll end the war before he's elected.
Yeah, I heard.
What do you make of that?
Я скажу честно.
Let me be frank.
Давайте, наприклад, це вирішення.
For example. Well, the decision is on US public. But let me just have some reasoning. Так, але для вас це важливо. Yes. So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
Ukrainian President Volodymyr Zelensky speaking with Bloomberg's Anne-Marie Horden there. Meanwhile, coming up, we're going to dig into equities, where to place your bets amid what are still near or at record highs across the United States. Fawaz Chowdhury is with us, head of equities over at Fulcrum Asset Management, why he remains bullish on the US economy and, controversially, bullish on US housing. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to Bloomberg Markets. I'm Caroline Hyde in New York. Quick check on these markets for you. Look, we're only focusing on futures because it's the 4th of July. People are off celebrating, but we can get a signal of where risk appetite lies. We're at record highs yesterday, and we're up just 5 points on the futures. Stock 600 up 0.6%. Even as France heads to the polls, the UK is already at the polls today, but we're currently seeing some risk on appetite when it comes to European stocks. Most industry groups on the higher side, all bar utilities. I'm looking at the dollar index falling as services data came in weaker yesterday, and does that mean the Fed can indeed cut as soon as September? Bitcoin, though, even with a weaker dollar, is falling some 4.4%. We're well below some of those, well, key trend lines. The 183-day moving average was the one that we're keeping an eye on. It sinks below it. And does that mean, therefore, support is gone for the rest of the year? I'm looking at what's happening on the NASDAQ, though. Big tech actually just slightly down by 7 points. Not much. Again, the NASDAQ was at a record yesterday. 10-year yield, well, we don't keep an eye on that at the moment. Well, the futures market is where we look on the bond market. And really, we've seen borrowing costs trying to digest whether or not we see a Trump win and what that means for, well, selling off the longer end of the curve as we see fiscal discipline just fall that much lower. CAC 40 up 0.8% as France indeed Sunday, the second round of voting. And does it seem as though a clear majority for Marine Le Pen is no longer on the table? MSCI Asia, actually Asia getting a bid up more than a percentage point. Well, we want to focus in on what that NASDAQ has been doing and the fact that we have been at record highs and the fact that basically stock markets have had an extraordinary year, largely thanks to artificial intelligence here in the United States. Someone who can talk about that is Fawaz Chowdhury, head of equities over at Fulcrum Asset Management, where artificial intelligence has been a key theme for your funds and those that you oversee. Fawaz, does the AI run-up still have legs?
Thank you for having me. Absolutely. I think it's a seminal technology. It's going to be here rest of the decade. At the moment, our highest conviction remains in the picks and shovels plays, but also in the second and third derivatives. So long way to go. I don't think valuations are stretched, and a huge amount of capex spending coming to build out the AI infrastructure.
Picks and shovels being, I guess, chips. And everyone has been so focused on NVIDIA and the $2 trillion that have been added over the course of just 6 months alone. But there are other players that have caught a bid. And I'm wondering where you start to identify as places that are undervalued at the moment.
Well, we think memory is what we like the most within semiconductors right now. And SK Hynix, the company in Korea, makes this high bandwidth memory, a specialized form of memory. And there are only two other memory producers, Micron in US and Samsung Electronics. And this high bandwidth memory actually has very low yield. So it takes up even more of the supply. It's on a 3-to-1 ratio. So as global AI spending grows towards 5% of memory market with high bandwidth memory, it will have a 15% impact on supply side. So Micron will win, SK Hynix will win, and some of the other memory tool producers like Disco in Japan are also what we like.
Micron, interestingly, has been suddenly a high bandwidth memory play, but there's also been issues of that it's sold into China. How much has geopolitics been a factor in some of the upside for these companies?
Well, Micron, Hynix, and Samsung, again, only three companies in the world can actually make memory at this stage. The sector has consolidated so much. And the AI is very memory intensive. So China does not have domestic memory producers. So one way or another, either older memory or more older generations of memory will go into China, and that's not going to be stopped. And if it's not Micron, it'll be the Korean company selling. So it doesn't matter if Micron does not sell to China and Hynix and Samsung do, Micron will sell to some other customers.
Now, if you haven't been able to play the AI and tech magnificent five of these been, you might have been able to play healthcare, and that has been the other extraordinary performer of 2023 into 2024. There have been some headline risk to the makers of Ozempic and Wegovy of late, something of Eli Lilly, I'm thinking of Novo Nordisk. But are you still thinking that these extraordinary drugs are remaining the key players for the next iteration of healthcare play?
Well, I have even more confidence in them than the AI play, and AI teams will at some point transition from the picks and shovels or the infrastructure to the software or value add. The products don't exist yet, which will generate the value. For AI, for obesity, on the other hand, we'll see the penetration keep growing. So currently, 3.5% of US population is on weight loss and obesity treatment drugs. And we think by the end of the decade, that'll be 10% and 15% by 2035. Wow. And it's an extraordinary growth. And it's a duopoly between Eli Lilly and Novo Nordisk. And Novo Nordisk is already the largest company in Europe. But we basically feel that these companies are still, Novo Nordisk 2 years out at 30p, 25p kind of multiples, 2 years out, 3 years out, are not expensive. And we think there's a long way to go for them.
Does that become the be-all and end-all play when it comes to these two players? I sat down with the Eli Lilly CEO a couple of months ago, and he was really trying to articulate that they feel they've got these basically miracle drugs to be able to help the way in which we look and our obesity and our internals, but it's our brain health that needs to be focused on now, and that does seem to be something that they're gaining some improvement with, in particular when it comes to degeneration of the brain, a drug just yesterday getting the sign-off here in the US with the FDA. How else do you think these companies run with R&D?
Well, Novo is pretty much only a diabetes and obesity company. You're right. Lilly has Alzheimer's and some of the other drugs as well. But at this stage, with these market caps, they are basically all defined by weight loss and obesity management drugs. So we should just focus on those. And those are miracle drugs in the sense that 70% of US population is either obese or overweight, and that these drugs help with cardiovascular disease, kidney disease, sleep apnea, even mental health and well-being. And we will add average lifespan to US population as more of the penetration grows. So miracle drugs is the right word. They work, and everyone wants to lose weight.
Are you long short as well? I mean, is there an area that you bet against when it comes to health and when it comes to ultimately people feeling that we're not going to be eating so much, or bad food at least?
Yeah, so some of our best returns have come from identifying the losers from any team. And you could ask from AI team, and we think it could be software. But from obesity, basically, some of the cohort that goes on these obesity drugs, their alcohol consumption drops 40%, their sugary snack consumption drops 25 to 30%, cigarette consumption drops 20-25%. So all of these, as the percentage of population that goes on these drugs grows in the US, then consumption naturally for these categories will drop. And when I spoke to Hershey management, they told me 40% of their product is consumed by 5% of their users, who are basically of 35, 40 BMIs and eat 10, 12 candy bars a day. This is the problem. And this is the market, a total addressable market that is being attacked for these staples businesses, which will shrink. Yeah. So we are short these businesses. and they are underperforming. And we think that will continue as well.
Maybe a more healthy consumption of the odd treat now and then for us. Talking of treats,
fruits and vegetables.
Yes. Yeah, I mean, everything in moderation, including moderation, is my line. But I'm interested in what ultimately has been a moderation in the housing market here in the US, and whether or not, with mortgage rates as high as they are, we can start to see, with rates falling, more of a focus on housing. I introduced you previously when we were talking about having you on, that maybe you've got a bit of a more against the grain view on the housing market here in the US.
Yeah, that's fair to say that AI and obesity themes are well established. I think US housing, when I attend buy-side dinners or generally on the street, it's universally hated. Everyone is waiting for the housing market to crack. On the flip side, 35% of all mortgages were refinanced in 2020 to 2022. The average effective mortgage rate paid by US consumers is currently 3.8, while the incremental mortgage rate is at 7%. So they're all sitting on paper wealth with mortgages with 26, 22, 28 years remaining, locked in at 3%. And hence mobility has collapsed, and that housing inventory has disappeared from the market. So there's actually a shortage of housing as people are sitting on mortgages that they've locked in. And that shortage is leading to house prices continuing to rise. So you said pullback in housing, but actually, if you look at house prices, they're all-time highs and still rising because of that shortage I just talked about. And even rent growth is very strong. So home builders continue to find demand for their product, even with effective rates on a new mortgage at 7. So yes, the construction activity is slowing, but they will clear their backlogs, and house prices, they think, will continue to rise. And we like home builders here for that reason, which is a contrarian view.
We like contrarian views, Fawaz. Thanks so much for joining us today. Happy July 4th over there in the UK. Fawaz Chowdhury of Fulcrum Asset Management. Coming up, well, political uncertainty pretty prevalent in France. How the markets are digesting the run-up to the final round of elections on Sunday. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
In terms of healthcare and being a leader of an incredibly important French company, our first priority is to ensure that whoever governs, they provide a predictable, stable environment, because research is a 10, 15-year process. So, we need to think long-term. We hope that whoever leads the country will think long-term. We know the current government has been incredibly supportive of innovation and creating that ecosystem. We hope that that would continue. Of course, there are people trying to understand what it means for the economy, much like for the change in government, if it's to come about in the UK. And people want that predictability in the markets too. We're a long-term player trying to do the right things for patients, trying to drug the undruggable. And we hope to partner with whoever's in power, of course, because we have to be ready to do our part for society. And so far, we believe that can continue.
That's Paul Hudson talking to me yesterday, the CEO of the French pharma giant Sanofi, talking about the impact of the French election. Of course, the final push is upon us. The rivals of Marine Le Pen gaining momentum as they try to work against a majority for the right party. It's all ahead of that second round voting for the French legislative vote that will take place on Sunday. Who better to ask than Bloomberg's Caroline Conan, who's currently in Paris. And Caroline, it does feel that domestic policy is what's at play here, but maybe for the markets at least, the worst case scenario might be avoided.
That's right, and the worst case scenario for the markets would have been a victory, an outright majority of the far left. And that seems to be a scenario that's not going to take place on Sunday in this runoff. It's also going to be much harder for the National Rally President Jordan Bardella and for Marine Le Pen to get an outright majority of the far right, given the number of candidates who have pulled out of the races for this runoff. So more than 200 candidates have actually pulled out, meaning you have a so-called Republican front with one candidate only in most of the constituencies facing the National Rally candidates. So that makes the chances of getting an outright majority of the far right actually much lower. In fact, Marine Le Pen was on the television last night, on television again this morning, saying that Macron has allied with the far left, and that was his big dream from the beginning. But President Macron has responded by saying he will rule out any sort of coalition with the far left. So if anything, he will pick a moderate from the center left to try and form that kind of coalition. At the moment, though, President Macron is kind of flying low, leaving the rest of the campaigning to his Prime Minister, Gabriel Attal. Tonight, we're going to have another prime time television political debate on TV with Gabriel Attal, with Jordan Bardella, and with also two representatives from the far left and the socialist, Raphael Glucksmann. Raphael Glucksmann, who was saying this morning that France is on the edge of a cliff, and we don't know exactly whether we're going to jump or not.
Let's talk about the potential cliff when it comes to policy making in France. We had Sanofi saying, look, under Macron, it has been a business-friendly, innovation-friendly ecosystem build. There is a worry that that changes. A coalition is not the usual state of play in France. How much more difficult does it make policy making?
I think, the main concern for the markets was an outright majority for the far right, because this would have meant clashes with the EU. For example, when it comes to fiscal rules, and this would have made the budget in the fall very difficult. Now, the hang parliament scenario seems to be the likeliest scenario at this stage. Some have been talking about a technocratic government, even though we had former ECB President Jean-Claude Trichet on this week, who was saying that he does not believe in a technocratic Italian-style government at this stage. So a wide coalition with the moderate from the left, the moderate from the right wing is the most likely scenario. We'll see what this means for the pension reform, because you know that Macron spent many months last year trying to get approval for this pension reform. You had months of protests in the street. So is that going to reverse the pension reform? At the moment, we already know that Macron has suspended the implementation of the unemployment benefits reform, trying to extend a hand to the moderate from the left wing. We'll see how that pans out, but clearly it's going to be very difficult for France to do any kind of significant reforms over the next 3 years.
You are going to be having some really significant conversations going into this election come tomorrow at Aix-en-Provence with key policymakers and macro thought leaders. We can't wait for it. Caroline Conan, thank you for bringing us the latest today from Paris. Meanwhile, staying in France, there's corporate news. Two of the largest companies in the nation are considering a joint venture when it comes to asset management. It would create a $1.5 trillion giant, potentially. Talking about the insurer, AXA, potentially looking for a joint venture with BNP Paribas Asset Management. I'm pleased to say we are joined by Alex Rajambandari over in Paris. And Alex, what is really pushing AXA's CEO to want to merge his part of the business that tries to offset risk?
Hi. Well, there are several things at play here. AXA's been mulling options for its asset management unit recently, but there were rumors in the past, over 7 years ago almost. So this is something that's always been kind of floated as an idea. Now here, BNP Paribas, as you know, has been trying to deploy the billions of cash they have pocketed when they sold the US Bank of the West a couple of years ago. So it's kind of the perfect storm, right? There are two companies that are quite large in France, but with asset management units that are quite subscale. And as you know, in the asset management sector, globally, players are trying to gain scale in order to remain competitive. There's a huge pressure on margins, there's a huge pressure on fees, and gaining scale, having more power and more assets under management is the way to go. So creating 1.4 trillion euros in asset management units, it's going to be quite significant for France. It's two large units merging together. It remains quite far behind Amundi, the first one, which has more than 2 trillion euros in assets under management.
Alex, what about regulatory risk? Would there be any?
Well, it's really, I mean, the talks are not really advanced so far, and the banks haven't commented on our story. So it's quite early to tell whether there's going to be some concerns. However, I mean, this is something that will come into play for sure, because these are two French units, and the merger is going to be quite a big change for domestic players. However, it's not really clear for now whether Brussels is going to look at this very thoroughly. It depends on really the assets and the classes and the funds that they were offering to clients here in France.
It's a great scoop by our colleagues at Bloomberg. Alex Rajbandari, we thank you so much for talking us through what could be quite the combination. Meanwhile, we want to be talking about Fed policy back here in the United States, in particular coming from Chicago. Goolsbee is who we're going to be speaking with. Policymakers should start preparing for rate cuts. Hear from him next. This is Bloomberg. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Caroline Hyde in New York. Now, Austin Goolsbee is saying that policymakers in the US should cut interest rates if United States inflation continues to fall back to that 2% target. Bloomberg's Francine Lacroix sat down with the Chicago Fed chief in Sintra, Portugal. Take a listen.
Look, there's a danger from waiting, and there's a danger from making wrong moves. The basic function of the central bank and what the Fed's got to decide is we move to a quite restrictive posture. We raise the rates a great deal in a short period of time, and we've been holding it there. We got to this rate when inflation was over 4%. And inflation's now down close to 2.5%. So if you sit with the rate somewhere while inflation goes down, you're tightening. And the reason that you would want to tighten is if you think you're not on path to 2%. If you're on path to 2%, you've got to take seriously that the U.S. central bank's got a dual mandate. So if employment starts falling apart or the economy begins to weaken, which you've seen some warning signs, you got to balance that off with how much progress you're making on the price front.
So how worried are you about the unemployment rate, but with the jobs slowing down?
I mean, it's still, the unemployment rate is still quite low, but it has been rising. And if you look at quit rates, if you look at the ratio of vacancies to the number of unemployed workers and various conventional measures of the job market, they're cooling, but they're at a level which is still pretty strong. That's kind of what we've been trying to fully sort out. Now, I think if you look at the second half of last year, in the U.S., we had 7 straight months of excellent inflation. We hit a bump in the road in January of this year, but now we've gotten a string of improved inflation readings. If we get more like what we have just seen, to me, that feels like the path to 2%.
Chicago Fed President Austin Goolsbee speaking with Bloomberg's Francine Lacroix there. Coming up, look, we're going to get more insight on macro policy, on central bank policy. Daniel Morris, Chief Market Strategist at BNP Paribas Asset Management, joining us, why he still thinks that, look, fundamentals are more important to markets than those political risks. From New York, it's July 4th. This is Bloomberg.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Welcome to Bloomberg Markets. I'm Caroline Hyde in New York. Here are your top stories that we're following on this 4th of July, when pressure is growing on Joe Biden to drop out of the presidential race. Democratic governors, they emerge from a crisis meeting and say they back Biden. Meanwhile, investors grapple with the political uncertainty from the US to the UK, which votes today, and France heads to the polls for a critical election on Sunday. But deals are still brewing as French firms potentially unite. AXA is said to be weighing a joint venture with BNP Paribas Asset Management that would create one of Europe's largest players. But first, let's check in on these markets. And of course, we turn our attention to the futures market here in the United States because, well, the main benchmarks are closed. We're off partying for 4th of July. We're currently flat on the futures market, having been at a new record high yesterday. The Stock 600, though, managed to push up 0.6% as we see some risk-on attitude heading into some of those elections. Bloomberg Dollar Index on the downside after the ISM services showed some weakness, significant weakness, most weakness since 4 years, and also a slight cooling in the jobs market. All eyes on NFP come Friday. I'm looking at Bitcoin up by 3.5%. Look, even with a weaker dollar, we're still seeing money coming out of Bitcoin. That's a supply side issue. Will we see Mt. Gox sales start to occur? Will we see the German government start to sell Bitcoin? Will we therefore see it continuing to be under pressure? Move on and have a look at what's happening on some of the other key benchmarks for you. I'm looking at the futures market, and these are individual movers, in fact, that we're currently seeing at play in Europe. Oh no, there we go. Director gets it immediately down to 0.1% on the Nasdaq 100 futures. Maybe a little bit coming off the table after what had been another record high for tech stocks. Looking at the CAC 40 up 0.8% as we do head to the polls come Sunday. And MSCI Asia Pacific actually up more than a percentage point. Asia stocks doing very well at the moment. But we look at some individual movers that have been the key players of France, AXA, BNP Paribas. We get to that story later. Will we see a joint venture in terms of asset management that could have $1.5 trillion under management? Continental, tire maker, up 8% as Chinese sales do well. And Grifols, we look at that Spanish company that is, well, trying to settle itself with a new CFO. Bank of America is where they poach from. We're up 1.25%. But look, we're going to turn our attention to politics, to geopolitics, and some of the impact that, of course, the ongoing war in Ukraine is continuing to have. Like everyone else, President Zelensky is preparing potentially for a United States where Donald Trump might be president once again. In an exclusive interview with Bloomberg Kyiv in Kyiv, Zelensky said, look, he would like to understand how Donald Trump thinks Ukraine should end the war if he were to win November's election.
So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today, because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
Look, will Ukraine have the US's support, or will the country have to keep fighting without? Just one possible consequence of this year's election. Joining us for whether indeed Trump could expedite any sort of ceasefire is Mark Champion, Bloomberg opinion columnist for international affairs, who has a great thought leadership piece out today, Mark. I loved reading it because ultimately it speaks to the hubris and perhaps the arrogance of us in the West to think that ultimately Russia invaded Ukraine because of us, because of NATO. But you say, look, Trump and many others have got this wrong.
Yeah, absolutely. I mean, this is, we always tend to think that everything happens, because of us. And in fact, a lot of, around the world, people always assume that, if something happened, it must have been the US that did it. If it didn't happen, maybe the US was too weak and should have, made it happen. I mean, there's this sort of solipsism that we are sort of generally guilty of. The fact is that, of course, great powers do have an impact, but countries have their own agency, especially a country like Russia. Putin makes the same mistake. He assumed that Ukrainians had no agency, that, if they went out into the streets in 2013-14 and were protesting, then it must have been the CIA. 1 million people in the streets must be the CIA. It's not, and that's how he made the mistake initially, going into the war, invading, thinking they wouldn't fight. Of course, they did fight, and here we are. And so the point I was just trying to make was, if you want to make peace, you need to have a really strong grip on what it is that the Russians want and what their goals are. Because that will determine, they will try and achieve their goals also through peace negotiations. So understanding what they want will let you know, A, what they will be willing to accept, but also, if they accept something, is this just a part of a wider plan to go further, to restart the war at a later date, or does this have a chance of actually working? And so that's really the point that I wanted to make, and there's been a sort of transformation within Russia that really needs attention.
Can you talk us through that transformation? Can you talk about what ultimately Russia wants, if indeed we are in any way to consume and understand this ahead of any change in the White House?
Yeah, absolutely. I mean, it's a big subject, but in essence, you had the collapse of the Soviet Union in 1991, and our tendency was to think, well, that's that. And in fact, it was the beginning of a process, of disintegration, and we're in it. It's not, it wasn't over 30 years ago. We're in that process at the moment, and the Russians are very much contesting exactly where their borders should be. They were never a nation state in the sort of, the traditional sense that you have in Europe. The borders that exist, internationally recognized borders of Russia now, are not borders that Russians sort of necessarily, recognized. And even back in the 90s when I lived in Russia, you would very, very few Russians you met thought that Ukraine was a country, or that Belarus was a country, or indeed that Kazakhstan was a country. Because they were used to this idea of the Soviet Empire, the Russian Empire, being what Russia was. And that is now what is being taught very aggressively in Russian universities, in Russian schools. They're being taught that there is this civilizational state, which is somehow bigger than a state, and it includes, a sort of indistinct, borders that are not necessarily the borders that Russia has now.
I'm going to ask a controversial question, Mark, but do you think either current candidate for the White House or indeed candidates for leadership in the UK or France get this?
In general, no, I don't. I think that, we, as I say, we tend to be very solipsistic. I think once you get into Eastern Europe, they understand it because they lived it. But I think, it's rather sort of, poorly grasped, especially in the US, where, there is this debate. There's a very strong debate in the US about, whether NATO was, at fault or not. But it's really a debate about US foreign policy. It's much less a debate about, well, what does Russia want? What does Ukraine, what is their history? They've been fighting for centuries, including, periods of genocide and so on. This is a long story. We are kind of, neophytes in it, and I do think that it's not very well understood.
As a man covering international relations within Europe, Russia, and the Middle East, you are a busy man, Mark Champion. We really appreciate you spending some time with us today of Bloomberg Opinion. Meanwhile, coming up, Daniel Morris, Chief Market Strategist at BNP Paribas Asset Management, why he still thinks fundamentals are more important to markets than politics. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Caroline Hyde in New York. We've got to get to these markets. They're currently, of course, only trading futures here in the United States. We celebrate hard July 4th in the United States. But, well, one American who's based elsewhere is Daniel Morris, BNP Paribas Asset Management Chief Market Strategist, who we can lure on to talk us through, ultimately, what is occurring in the markets from a fundamental point of view right at the moment. Because, Daniel, we are looking across the US, the UK, Europe more broadly, at political risk. But actually, what the market should be dictated by is what, more the services data that we got yesterday, the non-farm payrolls that we get on Friday?
Well, absolutely. I mean, right now, clearly, we've got so much happening on the political front, and it's, I guess, a nice change from looking at the latest PMI figure or CPI. But those numbers are the indication of what's going to happen in the markets. And really, I think the upcoming CPI figure for the U.S. is particularly crucial because, as we know, last month's was surprisingly weak. It was confirmed by the PCE, personal consumption expenditure data, which would suggest inflation really has just disappeared, and we should look for who knows how many cuts from the Fed between now and the end of the year. It's probably not going to happen, but we need to have another bit of confirmation in the data, and I think that's going to hopefully come from the upcoming CPI.
11th of July, we brace ourselves, 3.1% is where the market consensus currently lies. And if we are likely to see what was articulated in Portugal by Fed Chair Powell, that we're seeing this cooling in the jobs market, that we're managing to see inflation coming back on track to 2%, is any of that dissuaded or moved around in terms of the cut analysis by Trump in the White House and a sudden turning on the taps of fiscal spending?
Well, I think there are two things that are going to influence the Fed's perspective. You mentioned fiscal spending, and then, of course, the other one is tariffs. And if you look at the markets, you have seen an increase in inflation expectations in the U.S. over the next 1 to 3 years post the debate. So the market's already starting to price in that possibility. In fact, we think the markets are a bit too, or rather overconfident about the inflation outlook. And we think the risks to inflation under the scenario of a Trump presidency are higher than the markets have priced in. So we think about the two factors, again, certainly tariffs and how that's the reaction then from other countries. But it really is the fiscal question that is going to matter the most. Already, as we're aware, budget deficits in the U.S. are high, debt levels high, interest rates high. And then you add to that debt burden, not necessarily a very attractive picture, at least if you're a U.S. Treasury investor. But whether that happens or to the degree it happens is really going to depend on what happens in Congress. You know, as we know, if you get full Republican control, that's a quite different scenario than if we end up having a divided Congress.
Daniel, to that point, how do you then, with your white papers, with your research analysis, the teams that you build, inform BNP Paribas Asset Management about sort of hedging that risk that we could see a greater sell-off in the bond market?
Well, it's a very good question, because what we've asked ourselves, I think investors in general over the last several years, is the diversification benefits in a multi-asset portfolio between stocks and bonds. And at times that's worked out well, but there's certainly been moments when that hasn't worked out well. And when it tends not to, it is in those scenarios where you have a sell-off in the Treasury market. Of course, we had one not that long ago when we got to 5% on 10-year yields. And that tends to be bad for bonds and bad for stocks. And you look for the alternative. So one area where we currently have an allocation, partly for those reasons, is to gold in our multi-asset portfolio. So I think that's one area where investors should think about an extra asset to hopefully protect their portfolios in the event we do see a darker outlook for Treasury yields.
What's been interesting, though, is even with those snaps of bond market sell-offs, and yes, in an interim basis, it takes the wind out of the sails of high growth names, but it just hasn't knocked out the up and up of what's been the AI trade. And when it comes to the equity and the bond market portfolio that you look at, I mean, does equity markets still go up and to the right under any sort of leadership in the US, because innovation, tech, the build out of artificial intelligence is just an unstoppable force?
I think what you've had for a lot of this year is actually, it's been on one hand, the positive momentum that you got from earnings. Clearly that's driving prices. But there have been moments where you've had a drag from an increase in policy rate expectations, particularly at the beginning of the year, when we had to go from 6 to 7 cuts priced in for the Fed to 1 to 2 now. And so that effect was there. It just got swamped by the enthusiasm on the earnings front. I think the worry that you would have for growth stocks, perhaps more next year than this year, is we've priced in a lot of enthusiasm because of AI and other opportunities for tech stocks. By next year, you would imagine the marginal increase is going to be rather lower. And then if you do have a scenario where interest rates are rising, you may not have that offsetting effect from earnings, or not to the same degree like you had this year.
Daniel Morris, it's always great to catch up with you. Thank you for your time. BNP Paribas Asset Management joining us there. Meanwhile, still ahead, we're going to take it back to the EU. The trade chief says they see no basis for tariff retaliation from China. Part of our interview next as the EU pushes back against Chinese EVs. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg Markets. I'm Caroline Hyde in New York. Now, Chinese EV brands, they're holding on to their share of the slumping European EV market. That's according to data from May, as new tariffs look to protect local automakers from cheaper imports. Earlier, Bloomberg's Francine Lacroix spoke with the EU Trade Commissioner, Vladis Dombrovskis, about this.
Today, we took the decision to impose provisional countervailing duties on Chinese battery electrical vehicles, basically to ensuring the level playing field and market distortion coming from subsidies which China is providing to its battery electrical vehicle producers. So our investigation has been done in strict correspondence with applicable WTO and EU rules, facts-based. So from that point of view, we do not see any basis for retaliation, and in any case, it's clear that we need to treat different cases separately.
So you're not even worried about retaliation, for example, in Tupork? They're investigating it, and if there was to be retaliation, are there specific industries that you think would be most at risk?
Well, as I said, we are not seeing the basis for retaliation, as what we are conducting is indeed in line with WTO rules. What we are also noting is that actually we are currently the largest market which is actually open to Chinese battery electrical vehicles. We know that other jurisdictions like US, for example, have recently imposed 100% tariff on those. So our aim is not to close the market to battery electrical vehicle producers from China, but only to ensure the fair competition and level playing field. So therefore, once again, we do not see any basis for retaliation for that.
So how's the progress going in terms of talks with China? And actually, is there willingness from China to make some of the substantial changes that led you to then put the tariffs on?
Those talks with China are ongoing, and indeed, should the mutually beneficial solution emerge, we can also find ways and not to apply at the end of the day the definitive tariffs. But it's very clear that this solution needs to resolve the market distortion which we are currently having in battery electrical vehicles and risk of injury for EU industry, and it needs to be WTO compliant.
Are you worried that member states could actually then block this, block the tariffs in November, or force the EU into a bad deal?
Obviously, we are in close consultation with member states now, also prior to imposition of those provisional duties. And it's clear that member states are also interested to protect their automotive industries from unfair competition and from risk of injury, as actually the market share of Chinese, both Chinese brand and broader, like made in China battery electrical vehicles, is rapidly growing. So from that point of view, if we leave the situation unaddressed, it's going to create more and more problems actually for EU automotive industry.
Executive VP, we're also days away from the second round of the French, of course, legislative election. Are you worried that a hung parliament would actually delay any kind of negotiation on policy, or would delay the workings of the European Commission and the EU?
Well, definitely we'll have to see. Well, there I have to provide somewhat institutional response, because in the European Commission we have a clear policy that we are not commenting elections or party politics in member states. We are working with democratically elected or appointed authorities from member states.
Latvia has again nominated you for a role in the next commission. Is there a portfolio you'd like to be in charge of?
Indeed. So there is a nomination. However, the portfolio distribution comes at the later stage, because now all countries need to nominate their candidates, and then President of the European Commission, which we hope is going to be President-elect already next week, as European Parliament intends to have this vote. Actually week after next week. And only then those discussions about portfolios would stay. So it's a bit premature question. Clearly, I would be interested to stay somewhere in the area of economy and finance.
I mean, I know there's a lot of talk or rumors that there needs to be a role for Vice President for Economic Security in the next commission. Do you agree? Would that be something that's worthwhile?
Well, as I said, it's premature to engage in these concrete negotiations, because many countries have not nominated their candidates yet, and it's very clear that President-elect will have to see the overall picture and then decide on distribution of portfolios.
EU Trade Chief Valdis Dombrovskis, of course, speaking with Bloomberg's Francine Lacroix on a day where the EU does indeed start to impose those tariffs on Chinese electric vehicles. Meanwhile, let's just check on the markets, because, well, it didn't take the wind out of the sails of Asia trading, and certainly S&P 500 futures that we look at on the day of July 4th, where markets are closed, just down about 4 points. Look, no big moves. People are at home. They're not getting too much. They settled their risk ahead of this long weekend that many are taking. But the European stock 600 is on the higher side, up 0.4%, coming off of our highs, but much political anxiety as the UK heads to the polls today, and we see France do so on Sunday. Bloomberg Dollar Index weaker on the back of that ISM data, but Bitcoin is also lower as we see supply side push lower. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the climate change. Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or what, how do you do that? Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to Bloomberg Markets. I'm Caroline Hyde in New York. On July 4th, we are seeing the futures market just down, but a smidge. When you're looking at the NASDAQ 100, we're currently off by 0.2%, let's call it. But remember, we're at record highs yesterday across both S&P and NASDAQ major benchmarks here in the United States. Look, when you're looking at the bond futures market, we're seeing a tumbling in terms of the 10-year. And I think ultimately we're still seeing pressure post the services data that certainly signaled weaker fundamentals here in the United States. And does that mean, therefore, the United States can see a Fed that cuts as soon as September? We're looking at CAC 40, though, managing to rise ahead of the political anxiety that is Sunday's election final vote, of course, and whether or not we've seen enough coming together with Macron and some of the centrist left and indeed far left to be able to see that Marine Le Pen's party will not sweep to a majority as many had initially anticipated. I'm looking at the MSCI Asia Pacific, currently up more than a percentage point. In fact, Asia has been on a tear for the trading day. And we want to look across Asia, across Europe, across the US, and at broader markets with none other than Jennifer Lee, BMO Capital Markets Senior Economist. We love it that you can go global with us, Jennifer. And at the moment, one key theme is political anxiety. No matter where you look, there are elections and there are question marks. Jennifer, is any of this having much bearing on fundamentals? For example, if we start here in the United States, how people are trying to price in whether it's Biden or not, and indeed whether a Trump presidency does mean more fiscal spending?
Well, hi there, and thank you very much for having me on. And yes, my heart's been racing all week with all of these elections and all of this political turmoil. And if it does have any fundamental impact, I would say yes, it does, in the sense that how much businesses, for example, will be potentially holding off or not ahead of the U.S. elections. In particular, I've seen, for example, with the ISM surveys, a couple of times, at least over the past few months, I've noticed that a couple of respondents have mentioned the uncertainty over the upcoming election. So if we start seeing some uncertainty play out because there's we don't know who was going to take over the Oval Office, then that could have a negative impact, I think, on growth. But I think this is all just the uncertainty and the waiting before we start seeing the actual fundamental impact playing out.
It's been interesting because, for example, we had Laura Martin on the show yesterday regarding the Paramount saga as it runs on, and that's M&A, and ultimately her viewpoint was hold off on M&A until you know who the next president is, who is in the White House, and ultimately, therefore, whether regulatory risk is bigger or less so when it comes to M&A here in the US. Interestingly, on the day in France, we understand that there's two key asset managers that are looking to maybe combine their units. We're looking at the insurer AXA and BNP Paribas. Jennifer, will ultimately some of the animal spirits of business be put off by these election anxieties? Are you seeing that in the high frequency data as much as you think could play out?
Not as much yet. Again, there's still some time to go before November, before the November election. But that's the whole issue with all of this, is that it's just all about political and policy, I should say, policy uncertainty. We don't know what's going to happen with taxation or with the climate, especially. We don't know what's going to happen with in terms of commentary made about the Federal Reserve and their independence. So a lot of this, has an impact on the animal spirits, as you put it. And but ultimately, I think it's going to be about what is actually done, the actions themselves that are going to be taken that will help drive economic activity going forward. And we won't really know for sure how that's going to play out probably until early 2025.
So for the here and now, we have the fundamentals to go on. How are you preparing yourself for non-farm payrolls here in the United States? Are we getting that Goldilocks scenario where you're getting a cooling labor market and a cooling economy that just dials back inflationary pressure?
Well, we started seeing that playing out over the last couple of months, but I don't know. I don't know if it was just me, but it seems like over the past couple of weeks, we've seen some more speeding up, if you will, of this slower economic growth. Which, by the way, we've all been anticipating, and it's going to happen after you've had, over 525 basis points of rate hikes over the past couple of years. So you're going to get that slowing, and this is what we want to see. But it seems to be playing out a little bit more quickly over the last couple of weeks. Like this week alone, I think almost every single economic indicator in the U.S. Came in below expectations, except for job openings. But overall, again, this is what we want, and this is all this supports what Fed Chair Powell said while he was in Portugal earlier this week, when he said that we are starting to see some real progress made on slower inflation. Whether or not that's going to be supported in tomorrow's payrolls numbers, that remains to be seen. But I think, as long as the overall story so far, every single indicator is pointing to slower growth, and I think that paves the way for what we believe will be the first rate cut to come in September.
Following from an ECB rate cut, and other central banks have been able to go further and faster, how do you look at Europe at the moment and feel that they're able to manage inflationary pressures? Let's take the political anxiety out of it for a moment.
So far, everyone's come a long way for sure, from those record highs from a couple of years ago. And the ECB, it's just like for the Bank of Canada here as well, had the comfort and the confidence to start cutting rates in June. But of course, going forward, that's a whole other story. It was almost, near unanimous vote from the ECB back in June, but it's clearly not going to be the case. It's highly unlikely that we're going to see another rate cut in July. We're expecting another move coming in September, but even that is not going to be unanimous vote from all of the governing council members that we've heard from just this week alone, who have been piping up. Everyone's been talking about either they're all on board for another rate cut. Whether it's going to be in September is a different story, but some of them are warning. One from Austria in particular has warned that we should never underestimate inflation. So it's going to be more of a fight and battle, I think, to get another rate cut in. But we are looking for one more rate cut from the ECB in September. And Bank of England, we're going to see what happens with the elections today, and see what the new chancellor or who the chancellor is going to be, and see what policies they bring in and how that is going to help or hinder the Bank of England's quest to bring inflation lower. So, we are looking for one Bank of England rate cut coming in August, but we're going to have to see how all this plays out after the elections.
Looking in Asia, there are some very different situations from a macro perspective, and all eyes again on the Japanese yen strength today versus a weaker US dollar, but more broadly, not strength. And I mean, are you anticipating intervention? How has the BOJ been managing this?
Well, when we say strength, I'm going to use that in air quotes because, it's at 160, just a little bit over 161 now, which is stronger. But considering the start of the year at 140, this is obviously still very, very weak. I've been waiting for, the Ministry of Finance to intervene, and so far nothing or very little intervention has been made so far. So, I'm expecting the Bank of Japan to probably tweak policy a little bit when they meet this week, just keeping in mind, how weak the yen is. But, it's a very different animal, playing out over there when you've got everyone else cutting rates or getting ready to cut rates, and you got the Bank of Japan possibly tightening policy. Even the RBA, they're still on the fence, and we do look for a rate cut for them to come later on in the year. But a rate hike cannot be completely dismissed, and they're still discussing it as well. So again, it's like a very different era that we're in with all these different central banks all moving potentially in different directions.
What's wild to think is, though, generally we've got stocks at record highs no matter where you look. If you're looking at Japan, if you're looking here in the United States, and Europe has been pushing higher, if not at records. With rates only likely to come down, do you think more broadly, people will still have a risk-on feel? When you try and compare what's happening in the markets to the fundamentals that you dissect every day, you're such a straight shooter here, Jennifer. What do you make of the idea that markets can only go up, it seems?
Well, I think it's all going to come down to the Federal Reserve, and as long as the market expects and it starts to get a feel of a whiff of a Fed rate cut, as long as we start seeing that they're becoming more confident and more comfortable, for easing policy, I think that would help, support financial markets. But at the same time, we're not going to see a series of rate cuts. I think it's going to be, again, to borrow from all the central banks speak, everything is going to be data dependent. Everything is going to be done on a meeting by meeting basis. One thing that we've learned is that we can't assume that everything is going to go in a straight line just because you've had like 3 consecutive months of or 3 consecutive months of better or worse inflation data. Doesn't mean it's going to continue that way. So it's going to be, I think central bankers are going to be remaining very cautious, including the Fed. Nobody wants to look foolish and cut too quickly or act too quickly. They want to make sure that things are going in the right direction before they finally start cutting. And I think, again, by getting back to your original question, I think everything is going to be all boiling down to what the Federal Reserve is going to do and how they're seeing things play out.
Central Bank to the world, Jennifer Lee. So good to have some time with you. BMO, capital markets, stay well. Meanwhile, coming up, look, talked a little bit about it, political uncertainty, but we're heading to France. How markets are anticipating the final round of elections come Sunday. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. We do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
This is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Caroline Hyde in New York, July 4th. And we all turn our attention to what's happening on July 7th. The final push, we understand, of course, by rivals of Marine Le Pen, that's gaining momentum in France, is ahead of that second round of voting, which will take place Sunday. Joining us now, Bloomberg's Caroline Conan in Paris. And Caroline, what's interesting, I was reading a note from Morgan Stanley that says, look, buy French stocks, buy the CAC into this election, because in the round of voting, because the two most probable outcomes are better than the market's currently pricing in for the economy and for stocks and risk assets. Can you tell us what those probable outcomes are?
That's exactly right, because basically the riskiest scenario for the markets is now out of the picture. That was a victory of the left wing on Sunday. Now there are two scenarios remaining. One is an outright majority of the far right of Marine Le Pen, and another one is a hung parliament scenario. And both these scenarios, according to Morgan Stanley strategists, are actually better than what we could have had when Macron called the snap elections after he lost the European elections earlier in June. So technically, what they're saying that the CAC 40 stocks are likely going to rebound no matter the outcome on Monday, especially if I can mention a couple of sectors, the energy sector, for example, the construction sector, the banking sector. They all have had a lot of pressure since Macron called these snap elections. They have started to rebound already after the first round last weekend. And clearly, the two scenarios that are remaining are less scary for the markets.
And just some of the concerns that would have come with a far left or indeed with a majority of far right would be, what, turning on the taps of fiscal spending and a more difficult relationship with Europe. How do we think, with the muddy, messy middle that we're currently approaching, will domestic and international relations bear out?
Yeah, of course, if Jordan Bardella, the National Rally president, does become prime minister next week, there is still a risk of clashes, a showdown with the EU when it comes to fiscal rules, because as you know, France was downgraded last month and France has been placed under an excessive deficit procedure by the EU already. So we could expect some clashes with the EU in the fall. However, if we have a hung parliament scenario and if we end up with a prime minister from the center left, you know, some personalities have been named, for example, former president François Hollande, who could make a comeback. Former socialist prime minister Bernard Cazeneuve is also a possibility, or perhaps some more technocratic figures also have been cited. This is more reassuring for the markets. We could see the spreads tighten to around 60 basis points. That's what some analysts from Morgan Stanley are saying. We could see the CAC 40 rebound, and there's going to be less of a clash with the EU. However, if there is a lot of left-wing members of parliament within the government, we'll see what that means, for example, for the pension reform, because we know the left wing has criticized a lot the pension reform that Macron passed last year, raising the retirement age to 64 years old. The left wing has been calling for cancelling this reform. At the moment, Macron is ruling this out, but we never know if there is a strong show for the left wing in this runoff.
All eyes on Sunday. Caroline Conan in Paris. All eyes on you tomorrow at Aix-en-Provence, a key event that you're going to be reporting from. We appreciate it. Meanwhile, turning now, well, to a key French giant, a pharma giant, Sanofi. I caught up with the CEO, Paul Hudson, yesterday to discuss how his companies, aside from political risk, is focusing in on leveraging AI, managing concerns about the technology. Take a listen.
Our approach has been how to weaponize our people to do better. Like, you know, I don't know whether you're familiar with Waze, the driving app, but I see it very much like that. I got to get in the car. I've got to start the engine and drive to the end of the street. And if Waze says I'm statistically more likely to have an easier journey turning left rather than turning right, I want that advice. That's crowdsourced, large data, real time. I want our people to feel they are amplified or multiplied in that event too. The goal is not about less people. The goal is about putting our people to be more effective and to have better decision intelligence. That in itself gives us a great opportunity to do something incredible. And we've only seen a huge appetite. That's why on any given day we have 18,000 people in our organization using the AI we make available. And I think that's pretty fantastic.
Let's talk about doing the amazing, the incredible, because we have just seen a push up in your share price on the day, and you've been reorientating this business of Sanofi and thinking about more R&D, about drug discovery and look, some costly cases in the way that you have to experiment, do clinical trials, but they've paid off today. And we think about the drug discovery when it comes to a key chronic lung disorder. Can you just tell us about what that means for the business?
We got approval for chronic obstructive pulmonary disease, COPD, affects a huge number of people, third biggest killer. We're ready to go now in Europe to be able to provide an advanced therapy that'll reduce their chance of going to hospital by a third. And that's a breakthrough when there's been so little innovation. We aspire to be the world's leading immunology company, and that's partly driven by moments like that we live for in our industry, to do things that transform or protect patients' lives or prevent disease. You know, the reality is we're a very proud, huge, big company, but we wanted to be at the forefront of science again. And we've made some big bets, but appropriately so, to try and make sure our science is some of the most exciting and it's first in class or best in class. And to couple it with our conversation of earlier, the more we add AI, the more we improve our decision intelligence, the more opportunity we have to do more in that space. And I think that's what's catching the excitement in our organization. And we believe we're quite far ahead. I mean, of course, we're very responsible about how we use AI, but others are still hesitating. We're taking our moment.
But sometimes you need good data to feed in to these large language models, Paul. What about the data on viruses such as, well, bird flu at the moment here in the UK and the US, indeed? Look, there is a worry that the data isn't being good enough in the United States. Is that something that worries you when you need to be developing a new vaccine for that?
Look, I mean, we've been through one pandemic. I think we've learned a great deal about trying to have the best data, and I think we position ourselves to take advantage of those opportunities on behalf of society. Frankly, we played a small part in COVID, but we stand ready should we be asked. The data and its legitimacy, you know, we often that data comes in through government channels, through health systems, you know, and we work at real-time speed to make sure that we have the very best data available. In terms of large language models and the rest of the data sets, you know, we collaborate far and wide. We have partnerships with Okin, with Atomwise, with Exscientia. We really are trying to make sure that we have at our fingertips huge data sets to mean our accuracy and our predictive capability is far ahead of the competition. We won't get it right everywhere, but the data integrity are the absolute fundamental starting place. Our relationship with OpenAI and with Formation Bio, we're putting our own data at play to make sure that they can learn from it too. Again, all boats should rise. We're in healthcare to do good.
As AI and pharmaceuticals interconnect, Sanofi CEO Paul Hudson there from our conversation yesterday. Meanwhile, coming up, we're going to look at a luxury super merger. We'll find out what the potential Neiman Marcus and Saks deal means for the luxury consumer. This is Bloomberg 10.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Caroline Hyde in New York. Let's get to a luxury retail deal, because the giant might be looming on a horizon if the owner of Saks Fifth Avenue manages to close in on acquiring Neiman Marcus, teaming together what are America's two largest high-end department stores. Andrea Felsted of Bloomberg Opinion covers the luxury space for us, joining us with details that then inject a little bit of spice with Amazon and Salesforce part of the deal. What is Hudson Bay's doing here?
Well, exactly. I mean, we know that the department store sector is in turmoil. We've got a lot of deals. We've got, Macy's also facing a bidder, also has allegedly raised their bid too. Nordstrom might go private. The interesting thing is Amazon getting involved in this. Amazon has long tried to get in luxury fashion with, quite limited success. This gives it another way into that sector at a time when online retail fashion is really also having a very hard time.
Having a hard time. It's interesting that Salesforce, I mean, why on earth they're getting in on taking a stake in luxury companies. They've had partnerships with Louis Vuitton in the past, but interesting, they too might be help financing a deal. Is this a very expensive deal? Is it that ultimately Hudson Bay's has to get creative about the way it's able to purchase Neiman Marcus?
Probably. I mean, it all helps to finance when things are quite tough out there. The luxury consumer in the US has pulled in. There was a great surge. Amid the pandemic, everybody bought, Gucci handbags and Rolex watches, and the lack of sort of stimulus checks and crypto gains saw them pull in. Also spending on things like travel once more. So life has really been very tough for that sector. So they probably had to get creative.
That's interesting, Andrea, because many would say that actually perhaps it's the higher end consumer who's remained relatively resilient, and it's often those that are squeezed in the lower income brackets. But how else are you sort of getting the read that the consumer's penny pinching?
Well, what's happened, you've got sort of two tiers in luxury. You've got the real wealthiest consumers that haven't seen any impact on their wealth. They've just been spending on Hermes bags, Brunello, Cucinello, sweaters. But what you've got is this aspirational luxury consumer, the luxury consumer that is sort of comfortably off, not super wealthy. And it's that cohort that's been hit by inflation, rising interest rates, and it was that cohort that had lots of extra money in the pandemic from those stimulus checks, stock market gains, crypto gains. That's reversed. Plus, they've seen those pressures on their incomes, and they're the ones that have really pulled back.
Andrea Felsted, it's always such a joy having you on. Bloomberg Opinion, giving us a glimpse as to the deals and how the consumer's feeling. Meanwhile, so much more coming up on Bloomberg Markets. Ben Laidler, Bradesco BBI Head of Equity Strategy, joining us next. This is Bloomberg.
names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
Welcome to Bloomberg Markets. I'm Caroline Hyde in New York. Here are the top stories we're following on this 4th of July. Well, pressure grows on Joe Biden to drop out of the presidential race. Democratic governors, though, emerge from a crisis meeting and say they back Biden. Meanwhile, investors grapple with political uncertainty. The UK votes today. France heads to the polls for a critical election on Sunday. But deals, they're still brewing as French firms unite. AXA is said to be weighing a joint venture with BNP Paribas Asset Management that will create one of Europe's largest players. But first, let's check in on these markets. And look, volume's thin as the US is off and partying. S&P 500 futures, look, we're down by 3 points, but we're at record highs yesterday. I'm checking out on the Stock 600 as we head towards the close of trade. We're up 0.5%, down from our previous highs, but still a little bit of a risk-on attitude as we see that Le Pen is set to fall far short of a French majority, so polls are currently indicating. So all eyes on that Sunday vote for France. We've seen Bloomberg dollar index off by 0.25%. That's more macro-related, more ISM-related, more the fact that services data is slowing. We keep an eye on non-farm payrolls as soon as Friday. And Bitcoin just coming off about 3.6%, risk off for crypto as supply-side concerns build from Mt. Gox, for example. Move on and have a look at what's happening in terms of other markets as we get the latest breaking news that Macron's group is projected to win 95 to 125 seats, therefore not allowing Marine Le Pen's party to have a majority. The Nasdaq currently off by 0.2% on the futures market. Remember, that was at a record previously. We've got the 10-year bond market futures really signaling a pull down in the bond market. Yields dropping some 15, 16 basis points as, again, the data cools in the US. CAC 40, though, up 0.8%. The relief that maybe the worst-case scenarios for the markets at least won't play out in the French election. Asia rose more than a percentage point. But let's bring it back to political anxiety closer to home. Sat here in the United States, it's all about Joe Biden. An eye of a storm. Calls continue to mount for him to step down as the presidential nominee. There are doubts from within his own party that he has what it takes to defeat Donald Trump in November's election. However, Biden has been getting some support from Democratic governors. Take a listen.
I'm here to tell you today, President Joe Biden is in it to win it. And all of us said we pledged our support to him because the stakes could not be higher.
None of us are denying Thursday night was a bad performance. It was a bad hit, if you will, on that. But it doesn't impact what I believe. He's delivering.
The president was very clear that he is in this to win this. And the president is our nominee. The president is our party leader. And the president has told us, and he was very clear back there, that he is in this to win this.
Let's get the international perspective of what's happening in the United States. Mark Champion, Bloomberg opinion columnist for international affairs, joins us. And you look at things through a lens of Europe, the Middle East, as well as Russia. But ultimately, what's happening on Capitol Hill right now, it is, I mean, a complete mess, to put it broadly. How are you thinking that other countries are relating to what is occurring in the Democratic Party?
Well, I mean, in a lot of parts of the world, especially the sort of western parts of the world, there's a real apprehension about a second Donald Trump presidency. So anything that makes that look more likely is concern. And I suspect, it's not really a worry about whether it's Biden or whether Biden is replaced, but whether a Democrat wins. And that Donald Trump doesn't, come back to the White House. This has really big implications. You already saw, President Zelensky of Ukraine in a, Bloomberg TV interview saying that he was really concerned about what Trump's plans were. NATO will be very concerned. NATO members will be very concerned about what Trump's plans will be for the alliance. You'll have, allies across in Asia and Japan also very concerned. And then, in the Middle East, it's quite nuanced. You may well see Prime Minister Benjamin Netanyahu in Israel quite keen to see a Trump presidency. I think it's been interesting how quiet in general Trump has been on the Israel crisis. Yeah. So it'll be interesting to see, because he has constituencies also in the Saudi Arabia, etc.
I mean, I think we both listened, gluttons for punishment on the All In podcast, listening to what President Trump said in some way around Middle East, and ultimately his view was it would never have happened had he been president. But is there any sort of detail you think ultimately Biden has actually fallen out of favor, many would say, with younger voters because of his handling with the Middle East? How do you think that there could be any assuaging of concerns there building up to the election?
Well, I don't think that's a problem for Biden. That's a problem for any Democratic Party candidate. I think it's less of a problem for Trump. These are not his constituency who are worrying about the rights of Palestinians in Gaza. It's much less complicated for him. Whoever takes over, if someone takes over, if it's the vice president, should Biden step down, they will have to address this also. They might find it a bit easier to do simply because they haven't been driving the policy. They haven't been the president in charge of the policy, but nevertheless, they will have to deal with it.
Bloomberg Opinions, Mark Champion, we thank you so much for giving us the international perspective on what is very much a US story right now. Let's make it a broader global market story. Ben Laidler joins us, Head of Equity Strategy over at Bradesco BBI. And Ben, let's just start on US politics, because how much has there been a re-rating in the bond market? How much has there been a reorientation of portfolios by trying to bet out who's going to win the US White House?
I think it's probably barely started, and I'm not sure how much more you're going to see. I mean, we saw a little bit of pressure up on bond yields. We saw a little bit, we saw an attempt at dollar strength, but, it's all just been swamped, I think, by the broader data, which just shows that the US economy is slowing and interest rate cuts, are coming. So we've got real sort of cross currents here. And I think it's a reminder that, we do obsess about politics, but there are an awful lot of drivers for markets here. And I think, we want to pay attention to US politics. It's the world's biggest capital market. It dwarfs the UK, dwarfs, France. But I think the fundamentals of this bull market are all about earnings and all about interest rate cuts. It's not really about politics.
Let's dwell on the interest rate cuts. For the here and the now, it looks as though, services data cooling yesterday quite substantially, and we look to non-farm payrolls. What are you baking in for Friday, and how much would a surprise affect the bond market?
So I'm hoping for a Goldilocks number, call it 150 to 200,000 on payrolls, a slowdown enough to reinforce that September rate first rate cut, but nothing too dramatic to get us to reignite these recession fears. And I think if Goldilocks remains sort of alive and well, then that's a big pillar of this bull market. That's going to give us 10% earnings growth, I think, when Q2 earnings kick off next week, and the US joining the rest of this global interest rate party, which kicked off 6 months ago.
Is there a risk, though, to animal spirits of corporates, to the desire to spend, particularly on artificial intelligence? That's really been the driving force from an earnings growth perspective and indeed from a spending perspective. Would anything dislodge what seems to be just a truck that cannot be stopped?
So yes, this bull market's been a one-legged stool so far. It's all been about the US and all been about big tech. So if that stumbles, we've got a problem. But I think from here, especially as we get a sort of economic soft landing, as we get interest rate cuts, I think this bull market broadens out. And it broadens out into those smaller US sectors. And crucially, I think it broadens out to the rest of the world, which are especially cheap and especially sensitive to these interest rate cuts and this firming of the economy.
Where's cheap? It's interesting because, I mean, the US has been at record highs. Valuations have been toppy if you look at some of the AI sectors. But Japan's at a record high. Other benchmarks have done particularly well. Where, therefore, is cheap, Ben?
So, Europe, the UK, emerging markets, they've always been cheap. They deserve to be cheap. They don't have a lot of these sort of super profitable, super growing sort of tech stocks. But even when you adjust for that, the US has been this outperformance juggernaut for, over a decade here. That's sucked in a lot of flows. That's inflated valuations. And that means that the rest of the world, maybe outside Japan, which has been a recent, bull market, is very underowned, is very cheap, and earnings are very depressed. Europe is still seeing a double-digit earnings recession because of this very cyclical market. And I think as the ECB rate cuts flow through, as the economy firms up, you're going to see a leveraged economic and earnings recovery here. And I think you'll probably see something similar in emerging markets.
Is that across sector? I mean, I've seen European tech stocks do well, of course, some of the semiconductor equipment makers. You've done well with a Novo Nordisk ownership, but what other sectors are going to do well in Europe?
So the leadership has been banks. Europe's much more cyclical. Banks is the biggest sector, and it's much more domestic focused sector. So I think these domestic stocks are the ones that are most sensitive to the rate cuts and are most sensitive to this sort of early firming up of the European economy that we're seeing. So I think it's going to be less about the tech stocks, less about the exporters, and more about these depressed European stories that have people doubting that Europe can ever grow again.
Well, let's look, therefore, sort of finish up where we started. There is a French election coming this weekend. There has been worry about ultimately suddenly a moving away from Europe and spending fiscally. And would that change any of the viewpoint that France is cheap and that you should get into European stocks more broadly, French banks?
It's definitely thrown some grit in the wheels over the last sort of month or so. I hope that the result of Sunday's French election, and maybe a little bit of relief that we're through the UK election today, will allow us to stop talking about politics and get back to the pillars of this European bull market, which are, rate cuts, a turnaround of this earnings recession against the backdrop of valuations that are very cheap. So I hope, being an equity strategist that hates talking about politics and is frankly not qualified to talk about politics, that we can just move on Monday morning.
Oh, chance would be a fine thing then. I'm sure you'll be dragged into talking about politics a few more times. But when it comes, you said the bull market has the underpinnings really ultimately of what the ECB does and the BOE. But is there signs that productivity is getting better? Are there fundamental viewpoints that ultimately the economies are steadying themselves and growing at the same time as just being at the behest of what interest rates do?
So if we look at the PMIs, we are seeing a stabilization, of economies. They've maybe done a little bit, maybe less bad is the way to put it, than we thought. But remember, Europe is much more sensitive to interest rates than the US is. Debt levels are higher, durations are shorter, more debt is floating rate. So I think even relatively small interest rate cuts could have a disproportionate impact on economies and therefore on these very depressed European earnings.
And on the consumer, with all those mortgages. Ben Nadler, Bradesco BBI, Head of Equity Strategy. Great to have you on. Thank you very much. Go enjoy the rest of the UK sun. Meanwhile, coming up, polls indicate Marine Le Pen is set to fall short of a majority in France. We're live in Paris with the latest. That's next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg Markets. I'm Caroline Hyde in New York. We had some breaking news at the top of the hour that polls are indicating Marine Le Pen's national rally and its allies that they're set to fall well short of an absolute majority in the French legislative election on Sunday. Joining us to break it down is Bloomberg's Paris bureau chief, Alan Katz. And this seems to be occurring because, well, Macron and centre-left and further left have worked together.
Yeah, so it's a little bit surprising, actually. So in France, there's a tradition of something called the Republican Front, and the idea of that is if and when a far-right party gets close to power, then everybody else sort of bands together to try to keep them away from it. And it was not at all clear on last Sunday when the national rally came in first in the first round of voting with about 1/3 of all the votes, whether or not Macron's party, or his party and its allies, and this left group that you pointed out, which includes both sort of center-left socialists, but also really far-left parties, including one called the France Unbowed, whether they'd really be able to come together to sort of strategically pull out candidates and turn what can be sometimes 3 or even 4-way races in France into 2-way races, where again, if the national rally got 1/3 of the vote, that means 2/3 of the people did not vote for them, and so they'd be likely, much more likely at least, to lose those 2-way races than if they had, say, 2 or 3 opponents against them. But in fact, they have come together largely, not always, but in most cases, and it's starting to show in the polls. We've had 2 polls so far, one that came out, as you pointed out just a few minutes ago, which showed the national rally probably getting somewhere between, one had 190 to 220 seats, the other one as many as 240 seats, but that's really pretty far away from the 289 that the national rally would need to get a majority in parliament. So it looks like they're still going to be the biggest party in parliament. They'll have the most seats, probably, according to these polls, but it doesn't look like they would have enough support to get the 289 to form a majority, to be able to form a government and run the government, which they said they would not even enter government if they didn't have that absolute majority.
So let's talk about policy making. How easy, how murky does it become if the polls are indeed right? And I say a big if, because as a Brit, I have a healthy cynicism for them.
So I would say that French polling has generally been pretty good. It's not perfect, of course, but it hasn't had these massive misses that have happened in other countries. But the answer to your question is very murky, because if it's not the National Rally with an absolute majority able to sort of name its own, have a prime minister named and name its own government, then who runs the country? And that's really unclear, because this Republican front that I mentioned really only applies to candidates in the second round of this election in order to try to prevent National Rally members from winning the election. After that, it's all a free-for-all again. And so you'd have to have negotiations between parties. I mean, in other countries, this is actually quite normal. In Italy or Germany or the Netherlands, coalition forming is just part of government. France really doesn't have a history of it. It's more like, I would say, the U.S. in this case, where it's not a two-party system, but usually there's one dominant party. It controls the National Assembly. It names the government. It passes laws, and that's that. And they really don't have a good plan or system, or certainly at least a culture in place to sort of make compromises and say, we're going to have, I don't know, the centrists of Macron's party and the socialists, who are more equivalent to social democrats in most European countries, we'll all work together and we'll form a government. There's no history of that in France. And so it's really unclear what's going to come in terms of how you form a government and how you actually write policy after this election.
More questions than answers, but still answers coming from Morgan Stanley that you should buy French stocks into this Sunday vote. Alan Katz, brilliant to have you on. Thank you very much indeed. Meanwhile, we stay with France, but this time we talk M&A. Two of the largest companies in the nation are considering a joint venture that would create a $1.5 trillion giant, AXA and BNP Paribas. Let's talk about it all. Alex Rajbandari is in Paris for us. And why, with asset management, is bigger better?
Well, so the two companies are not active in asset management themselves. One is an insurer, the other one is a banker. But those two units are considered to be quite subscale in the European market in general, but in France as well. And, the bigger the better, because when you have bigger teams, you are more efficient, and eventually you're more competitive in an environment where, there's a lot of pressure on margins and on fees, management fees in particular. So it's definitely a race for scale across the board, be it across the globe, but in Europe, and we've seen this with companies either buying some firms that would have some strategies that would be more profitable, like private markets. It's kind of a hot topic at the moment, or just buying rivals, and we've seen it with Amundi.
Amundi, like the key player in Europe when it comes to asset management. What's interesting is it comes at a time where AXA has sort of been pivoting perhaps a little bit less on life insurance, maybe therefore the need to risk offset dwindling a little. What, if any, are the blockers to such a deal? Is it something that seems to be quite far along in terms of negotiations?
So there's a few things that we're going to have to pay attention to. It seems to be really obvious that control is going to be a key part of the negotiations. There has been instances in the past where, asset managers have been walking away from deals whenever the terms were not in their favor or they would lose control. And in this instance, we don't know exactly what's going on. Talks are quite preliminary. They're not advanced yet. None of the parties, the plan is to create a JV. We don't really know the terms or what's going to happen next. What we know is that AXA has been evaluating options for its unit for a while. There were rumors several years ago, and in the past month they've been looking at options with other rivals as well.
I spoke with the CEO of Sanofi yesterday, and there's a company that's looking to spin off or maybe sell its consumer unit of its pharmaceuticals, but many had thought, look, it's going to have to do it to another French player to avoid a pushback from the French government. These are two French companies coming together as a joint venture, but would there be any regulatory risk?
Well, French authorities are not going to, as you say, it's always a concern from French authorities to make sure that any strategic unit remains into French hands. So this is not going to be that much of a problem for national authorities. The issue is more for, at Brussels and antitrust issues. It's way too early to know at this stage how this is going to come about. It really depends on what kind of products, where you can find, redundancies in the offerings of the two firms. But this is definitely a big deal for France. It's two of the largest asset managers of the countries uniting. It's definitely going to have some impact on the environment here in France and in Europe as well.
Alexandre, we thank you so much. Alex Rajbandari, breaking down what could be quite the joint venture. From New York, from Paris, this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep reading World Cup. This is a three
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Markets. I'm Caroline Hyde in New York, July 4th. Let's check in on those futures because, look, benchmarks aren't trading here in the United States because we are off partying. It is currently flat, down 1 point, let's call it, on the S&P 500 futures. Remember, we were at a record high for this benchmark yesterday. Stock 600, though, up 0.6% as we head towards the last few minutes of trading. We're, of course, anticipating what will happen in France in the course of the election on Sunday. We're also looking to what is currently occurring, people at the polls in the UK. Europe manages to go up 0.6%. We see the banks and other insurers managing to lead the charge. Bloomberg dollar index on the downside. This on the back of what had been